We can't wait to see what you've got. Let's get funded
now. This really does paralyze us. We have got to make sure that we have a leader who is strong and has the backing of the conference. I think the president's voice will be an important one in this. So far, he has lent his support to Speaker Johnson, and I'm presuming that continues. Then I think the speaker's in a strong position.
Something else he suggested to me, Sarah, was those who tried to be speaker when Kevin McCarthy was first ousted, Jim Jordan, Tom Emmer, Steve Scalise, probably wouldn't stand that much of a better chance this time around if Johnson weren't able to get the gavel. And I wonder if that actually is the most critical part of all of this, is that someone needs to be able to get to 218 votes, and there is no clear alternative to Mike Johnson right now.
That is absolutely true, as we saw last time we went through this mess. And Bill is a very active member of Main Street. I know he supports the speaker. We're hoping that this can go smoothly next year. If not, we could be weeks without a speaker. I mean, the margins are so close. And you're right, that some of the other leadership has tried in the past and they went down. So it would probably be another one that no one is talking about that would kind of come out of nowhere, just as the current speaker did, and get the votes and move on. Eventually we'll get to a speaker because the members will get so tired. They'll be like, okay, let's just vote this person in. And they did very well. Speaker Johnson kind of came out of nowhere. The members were tired. He's done a very good job. He's grown into this job.
So just quickly, because there's been a lot of, I don't even know if we can fully count it as joking, but ideas being thrown around that someone who's not a member of Congress could ultimately be speaker. Vivek Ramaswamy and Elon Musk, who are about to co-lead the Department of Government Efficiency, have been floated. Is there any world in which that happens?
So it's legally they can. I mean, but the one thing that the members aren't sure about is can Elon Musk do it, because he's not born in the United States, and there's a direct tie. Obviously, that person's second line to the presidency. That would have to be a constitutional change. Vivek, though, was born in the United States, so he certainly could become the Speaker of the House. It's never happened.
Yeah.
I don't see that happening, to be honest. I mean, the members of Congress all like being members. They all want one of their own. So I actually don't think that that's going to be viable.
Well, so whether or not that is actually a viable option, or we find ourselves in a difficult place in early January, it does contend with, or bring us to contend with the other reality that there is still other legislating that these members want to get done, that Donald Trump wants to see done. He wants to see a big legislative agenda taken care of very early in his first term, including the border and immigration, energy, tax reform as well. Has this entire episode to members of the Main Street Partnership helped evolve the thinking as to how exactly that should be tackled, given the difficulty of getting the votes for any kind of package? Can there really only be one?
They are beginning to strategize on that, but to be honest, they're going to strategize more on that in January. They did not see, as I said when I've been on the program in the past, they did not see the CR being this big a problem. They thought that they would vote on it and move on. So this has created something where, oh my, we have a huge issue. If the speaker doesn't survive, that's an issue. They have to tackle that, and then they start thinking about how to get President Trump's top priorities done in the first 100 days. They're very much with President Trump. They want to get this done, but right now we have to get through the exercise in the House.
Well, and to your point, this took a lot of people by surprise. We knew that it might get very close to the deadline, but literally everyone in Washington was like, no, there's no way we're going to shut down right before the holidays. It's just not going to happen, and here we are. Who ultimately, in the minds of members, is shouldering the blame for this? Is this the fault of Speaker Johnson for not reading the room right? Is it Donald Trump? Is it Elon Musk? I mean, where is the ire being directed?
Actually, to be honest with you, it's interesting to have the conversation. Where is President Joe Biden? I mean, the White House can release things, but he's not made any comments. You know, he got off the helicopter yesterday. He was asked. He stayed quiet. Like, what leadership role is he playing in this? And doesn't appear to be any. I know he said, the White House says he's talking. But is he really talking, and is he out there? And he's certainly not addressing the American people. He's not having a press conference.
But he's not
about
also
this.
out there saying, no, I don't like this bill, tank it.
He's not, but he's also not out there trying to get some of the Democrats to work with the Republicans to get something through. So there's not a chance of, you know, a government shutdown the last 30 days of his presidency. You know, no one's talking about the fact we have a president, and it is President Joe Biden.
Yep, for, I believe, 30 more days. It is December 20th. We are 1 month out from inauguration on the 20th of January. January. Finally, Sarah, as you talk about this notion of where the Democrats are, how do you see this episode potentially altering the working relationship of Hakeem Jeffries and Mike Johnson, who have been, for the most part, when it actually comes down to brass tacks, been able to work together to get must-pass legislation over the finish line? Is that going to be able to continue next year after Johnson reneged on this deal?
We're certainly hoping, but we're not sure, because if you remember, when they tried to recall the speaker, the Democrats stood up and helped the speaker maintain his speakership. I don't know if the trust is broken there. That will be something that the members will have to figure out. And frankly, if the speaker does stay, which we hope he does, the two of them will have to try to work that out behind closed doors.
But you're not counting on any Democrat not voting for Hakeem Jeffries to be speaker in favor of getting Mike Johnson across the finish line, at least initially.
At least initially, no, absolutely not.
All right. It has been quite a week in Washington. Certainly has been a week for Sarah Chamberlain and the members of the Republican Main Street Partnership. And we'll see how this one plays out. Again, we are not yet at that resolution point. As Sarah just reiterated for us, there's kind of two options on the table here, and it's not clear which option will be selected by the Republican Conference, which is still meeting right now. Sarah Chamberlain, President and CEO of the Republican Main Street Partnership, thank you so much. I hope you are able to enjoy the holidays and that the members eventually get to go home for them. You've been a great friend to us here in 2024, and we'll look forward to more in 2025. And I'm looking forward to more coming up in the late edition of Balance of Power, because we could be, frankly, in an entirely different place by 5 p.m. Eastern Time, which will only bring us 7 hours away from that midnight deadline tonight to avert a government shutdown. Again, option A may be a clean continuing resolution passed under suspension, which would require 2/3 of the House to vote for it. Option B might mean that we don't actually see votes on anything until tomorrow. So we could get a technical shutdown. We'll await firm word from Mike Johnson and the others in the Republican House. And the Senate, of course, has to chime in here as well. So we'll bring you the latest on the 5 p.m. edition. In the meantime, Bloomberg Business Week is straight ahead right here on Bloomberg TV and radio.
Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It's a Friday.
That's all you can say.
Definitely a Friday here at Bloomberg. Welcome, everybody.
It's
to
like a
Bloomberg
Friday
Business
before
Week.
a long holiday period when a lot of people won't be here.
Wait, is
That's
that
what it feels like.
happening?
It's happening. This is it for us, Carol Masser. This is
know.
it for us for 2024.
It's going to be a special one. I'm just going to lay that out right now.
All right, now we got some high expectations to live up to, but we'll make it happen.
Be kind, be kind. All right, everybody, it is Friday, December 20th, 2024. We've got stocks bouncing back off of their highs just a little bit right now, but it does feel like maybe a little bit of a holiday feeling. We did get a fresh read on inflation. We're going to get into that in just a moment. That is kind of showing that, okay, maybe inflation is kind of getting where it needs to be, according to the Fed.
Okay, we're going to have much more on the trade in just a minute. Also, that last Fed decision, check. Fed commentary beginning, check. Our own Michael McKee on his chat with San Francisco Fed President Mary Daly, and of course, that inflation print that Carol mentioned.
The Fed Palooza kind of starts again. You know?
Hey, they say
Fed-a-palooza.
it's the holidays, it's Festivus, it's Fed Palooza. That's what they say.
Fed meeting's over. Everybody can talk. Hey, here we go again, though. Another potential U.S. government shutdown. So we're going to get you the latest on that. We are watching. We are ticking down to a possible government shutdown at midnight tonight, but we'll see whether or not that happens. And another thing that's big time on our radar today.
Yeah, Novo Nordisk shares just plunging. Certainly one of my decliners, ADRs of those, that is. We got the news that's making it happen. Also, that's sending shares of Eli Lilly higher in today's trade.
Happens to be one of my gainers. And then Carnival CEO Josh Weinstein is going to be with us. They reported earnings today, stocks rallying, so we'll get into that. And then we're going to get into a story that is among our most read about corporate America hiring more black workers. Good thing. And then it stops. So we're going to get into the data. We crunch the numbers. So lots to come in the next 60 minutes right here on Business Week.
All that and more coming up. First up, though, a check on the day's trade and top business stories. Here he is, Charlie Pellet.
Right, thank you very much. And here's what's going on. We are looking at an update, yes, for the S&P 500 index up 1.4%, but we're looking at a losing week right now, down 1.7% right now, just under 2 hours to go until the closing bell clangs on Wall Street. The Dow right now up 615, up by 1.5%. NASDAQ up 269 for the NASDAQ Composite Index, up 1.4%. The 10-year right now 4.51% with a 2-year 4.30%. Gold up 1.2%, 26.26 the ounce on the precious metal, while West Texas Intermediate crude up 0.3%. WTI 69.57 a barrel. Bitcoin been all over the map today, right now down 0.4%, just below $97,000 on Bitcoin. FedEx shares are gaining after the company said it plans to spin off its freight division into a separate publicly traded company in a deal that will streamline the parcel giant. Wall Street likes the news, with FedEx up by 0.5%, rival UPS up by 2.4%. The other big earnings news last night, Nike, the stock now down by 1.1% after the sportswear giant outlined its turnaround plan to reignite growth. Again, recapping, off session highs right now, but the S&P up by 79, a gain of 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, 2 days since that decision by the Federal Reserve, it was, of course, the last of 2024. And this morning, the Fed's preferred measure of underlying inflation was muted for the month of November. So a step in the right direction for policymakers looking to cut interest rates further, Tim, in 2025.
Fed officials out talking about the latest Fed rate cut in commentary. It includes the president of the San Francisco Fed, Mary Daly, who spoke on surveillance this morning with Bloomberg News international economics and policy correspondent Michael McKee, who joins us now here in our Bloomberg Business Week studio. Mike, first up, the inflation data today. Does it support the Fed cut that we got this week?
It does, and it may be one reason that they felt they could go ahead with it, because they had already calculated what it would be. This is an interesting number because the way it's put together, economists and certainly Fed officials can pretty much calculate what it's going to be ahead of time. But what it does do is suggest that maybe there is some progress again. Jay Powell noted on Wednesday that maybe we hadn't seen, a lot of progress. Mary Daly said today that we'd seen a slowdown in the progress. She said, I wouldn't necessarily call it sticky, but inflation hadn't been coming down, and now we have a report that shows it was slower in at least one measure last month.
Right.
So I don't think we learned a whole lot from the Fed speak today as much as we did from the inflation part.
Maybe they're all having a lot of eggnog right now. Hey, let's play a little bit of your conversation with Mary Daly, president of the San Francisco Fed. She was on surveillance earlier today.
And today, I feel like we've got policy in a good place, the economy's in a good place, and we're prepared for whatever comes before us. My projection is that it will take many fewer rate cuts next year than we thought, but I'll watch the economy and see if that works out.
All right, that, of course, is Mary Daly, president of the San Francisco Fed, earlier on Bloomberg Surveillance, talking with our Mike McKee and, of course, team. So she's like, okay with fewer rate cuts than we thought, but they're going to still be data dependent. So if something happens, things could change. But that's how it goes, right?
Yeah, that's the whole point of what she's saying. We're in a good place. We can raise rates. We can lower rates. I asked her whether they might raise rates, and she said, you know, that's not on the radar screen right now, but it's always possible if we needed to, if inflation started going back up again. So they're all kind of signing on to where they are or where the Fed announced it was on Wednesday, while at the same time saying we have no idea what's going to happen going forward. John Williams speaking today.
Do Fed officials often say that? We have no idea where things are going?
Not in the same way that they are now.
Okay,
because
forgive me.
we only have Donald Trump once every 4 years coming into office with an unknown agenda. So that's going to be the big thing. Once we see what happens with the fiscal side of things, then the Fed can start guesstimating what's going to happen to the economy going forward. But for right now, their forecasts, they have no idea.
You mentioned John Williams. And
he was speaking on CNBC today, and he said he did fold a little bit of forecasting of what might happen from tariffs, et cetera, into his forecast today. But he said it's all confusion, and we really don't know.
Mike, I'm old enough to remember a few months ago when the Fed was concerned more so with the labor market than with inflation. That seems to have shifted.
It did, and Mary Daly essentially acknowledged that today without specifically saying it's shifted in that sense. They want people to think, yes, we're still focused on the labor market. We're focused on both, but it's inflation that is what was concerning them and is behind their idea that they might pause.
What was the inflection point? What changed sort of the balance in terms of that dual mandate, and when was that?
I think in the last, probably during the month of November, when we saw CPI and PPI come out a little worse than anticipated. At the very end of October, we had the last PCE report come in fairly flat, and so it looked like inflation was stalling out. We had the up and down numbers in employment, and so they kind of looked through that because of the hurricanes and the strikes and things like that. But the inflation numbers were telling a story that wasn't particularly favorable to their idea that inflation would keep going down.
when inflation does go down, and I feel like, you know, from month to month there can be variations in terms of where we see prices go up and down, but does it tend to be sticky once it's down there?
It can, yes, because certain things have to work their way through the system, and the biggest, of course, is housing, and we talk about this all the time.
Right.
And the current rent numbers have been going down for quite some time. It takes about a year to get into the data, and it's maybe has just started now. So maybe that will loosen some of the stickiness. And then you have one-off kind of things. We had the big hurricane damage, especially in the Carolinas, and everybody's car gets wiped out. So what do? They go buy new cars, buy used cars especially, and there's a shortage, so the price goes up. So that's the kind of thing you're constantly dealing with there. The biggest thing that they've been worried about is wages on the service sector side, and wages did come in strong today in the PCE report. Incomes were wages in the income report were up 0.6%. So Americans still doing okay. We'll have to see. If that doesn't slow down, then the Fed might be a little worried about that.
How do members of the Federal Reserve think about government shutdowns and the economic implications of those, and also with affecting their own jobs?
Well, it doesn't affect their jobs. They're quasi-governmental. The Fed,
so they're safe.
The Fed funds itself, so it doesn't have any appropriations from Congress that would be interrupted. And as far as shutdowns, and we always have to be careful and say it would be terrible if it were long enough that it affected the people in the government who weren't getting their paychecks. But on on a macro basis, it's almost like it doesn't happen because the rule of thumb at the Fed is it's about a 0.2 subtraction from GDP for every week that the government is shut down.
Yeah.
But as soon as it reopens, you get that extra 0.2 back because most of it is just back spending. Back pay goes to the workers, and contracts that would have been paid, get paid, and so it just sort of disappears from GDP. You can't really find it.
All right. Well, something to think about as we're going to switch gears and actually head to Washington. Mike, thank you so much. Have a great holiday. Bloomberg News international economics and policy correspondent Michael McKee right here in studio. So that is our update on the economy. But now let's get to that possible government shutdown.
That story requiring us to check our headlines and social media just constantly. That deadline, though, it's coming midnight tonight. What we do know is that House Speaker Mike Johnson strategized today with lieutenants and Democrats on how to rush a spending bill through the chamber ahead of a midnight U.S. government shutdown deadline. This, Carol, after legislation backed by President-elect Donald Trump failed on Thursday.
Yeah, so let's get to the latest. And I got to tell you, I'm pulling up my latest story because it is fast and furious today. We head to our Washington, D.C. bureau and to Bloomberg News Capital Influence team leader, Megan Scully. Megan, great to have you here with us. All right, so what is the latest?
It's funny. We're like updating the story as I'm sitting here in this chair. So House Republicans met behind closed doors just in the last hour or so. And Speaker Johnson presented them with two options. Option A being a so-called clean CR. We believe that would include keeping the government open until March 14th, plus disaster aid and agricultural aid. And then there is option 2, which is a lot messier and would take a lot more time, get us into Saturday most likely, where they vote on these portions of the bill individually, so members can sort of take a pick and choose approach to what they like and what they don't like, and then send it over to the Senate in one package. Because don't forget, the Senate still needs to vote on this whenever the House is done with its work.
Megan, I want to just take a step back and get some context here. What was in the package yesterday that President-elect Trump supported that members of his own party in the House did not? What's the daylight there?
It comes down to one thing: suspending the debt ceiling for 2 years. That is something that Trump wanted and was really actively campaigning for, because it would allow him to push through his tax agenda next year without worrying so much about how he was going to pay for it, because he wouldn't be constrained by any kind of a debt ceiling. So that would have given him a lot more wiggle room. But there were 38 Republicans who said no, many of them for whom this issue of the debt ceiling or of government debt is their number one issue. And there is no movement, even from the president-elect, that can get them to support it. People like Chip Roy, who Trump actually attacked yesterday, suggesting that he would actively seek to primary him going into the next election year.
I do wonder, and I'm curious if you guys can take the temperature of what's happening up on Congressional Hill. I've been thinking about this, and what it really means that legislation backed by President-elect Donald Trump failed late yesterday. Republicans now in the majority of Congress feeling a little bit emboldened, like, all right, we're in charge. The election is over, and that they don't necessarily have to kind of respond as they might have first go round to the president-elect, even though he will soon be in the White House. I just wonder, what can you tell us about tone and tenor, that's kind of our tone and sentiment that's happening up on up on Capitol Hill?
So since the election, Trump has been talking about a mandate, that he has this mandate, this unified control of Washington heading into his second term. In reality, though, the House in particular lost Republicans. And while Republicans still control that chamber, it is by the narrowest of majorities heading into January. And it is a fractious caucus, as we witnessed last night. You have ultra-conservatives, you have fiscal conservatives, you have sort of the old Roosevelt Republicans, people like Mike Lawler in New York, that to appease all of these various factions is going to be incredibly difficult. And we witnessed that last night. They cannot spare more than a few Democratic votes on any part, or more than a few Republican votes on any party line measure. So it's going to be a bumpy road ahead. last night really tested the limits of Trump's power. And we should also say Elon Musk's power in Washington.
Megan, if they cannot get to a resolution by midnight tonight, what happens? Not just in terms of the government, but what happens to lawmakers?
So come midnight tonight, or whenever the White House deems it to be a shutdown will occur. The government reverts to just all but the most essential parts of its operations. For lawmakers, it really depends. You know, if this is a technical shutdown, meaning it's one that just extends over the weekend, it's sort of like you forget about it pretty quickly. If this extends, like the ones in the first Trump administration did for weeks on end, you're talking 35 days in one case, then it really becomes problematic politically. Now, we're 2 years out from the next election, and in politics, that is a lifetime. But they're going to have to renegotiate whatever they decide, most likely again in the spring when government spending expires again. So this is a dynamic that is going to play out time and time again and could really vex Republicans for the next 2 years.
I have to say, I can't think about how many threatened shutdowns, actual shutdowns, how many conversations we've had around this over the last 10 years. Why do we keep happening this? I don't understand. Doesn't Congress approve a spending bill and we just have to abide by it? Why does this keep happening?
So as long as I've been in Washington, which is longer than I'd like to admit, we've always come to the brink of a shutdown. Congress likes nothing more than, nearly blowing a deadline. They're a lot like journalists in that sense. So we come up to the brink pretty regularly, and then, there is an agreement and things are able to be rushed through. One of our reporters refers to it as no, yes. And getting to that yes is the difficult part. Once you're there, you can kind of push it through, sort of powered on its own. But right now, the crux of what's happening here is that you have these extremely narrow majorities. Some of the narrowest we've seen in a generation, and a divided government with an incoming president who is not yet in power, but very, very intent on already exerting it. That complicates things immensely for Republicans who just want to get this done so they can move on.
Hey, 30 seconds, the debt ceiling. I think they're, to be fair, we have a super smart audience, but there might be some Americans like, what is this? Why do we care? Why was it important maybe that President-elect Donald Trump wasn't able to kind of basically push that off and have kind of the ability to push off the debt ceiling for a couple of years? Why is that important? 30 seconds.
Sure. So the debt ceiling is basically a spending limit, the credit card limit for the U.S. government. And so if the government exceeds it, then we default on our debts, and that is wreaks global economic havoc if it were to happen. Thankfully, it has never happened, but we could certainly envision what would happen if it did. Now, Congress imposes that, and they could get rid of it as well. Trump wanted it because his tax cuts are going to cost trillions of dollars.
Right.
So that'll count against that credit card, if you will, that Congress has given the administration.
It's like a balance sheet above and below the line. What you're held accountable for. Hey, Megan Scully, so appreciate it. Bloomberg News Capital Influence team leader joining us there from D.C. Coming up, earnings still trickling out, Tim.
Yeah, Carnival reported shares are higher because investors liked what they heard. We got the CEO joining us from Miami right when we come back. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks ticking higher. The Dow, the S&P, NASDAQ off session highs, but still advancing on this Friday. We are on track, however, for a down week. Here's where we stand with the S&P up 83 right now at 59.50. That is a gain of 1.4%. We've got the Dow up 625, now up by 1.5%, while the NASDAQ Composite Index up 280. That is a gain of just about 1.4%. The 10-year 4.51% with a 2-year right now at 4.29%. Gold up $33 the ounce, up 1.3%. West Texas Intermediate crude up 0.2%, 69.52 a barrel. And Bitcoin now trading higher, up 0.2%. Bitcoin 97,485. Carnival shares sailing higher right now. Its initial outlook for 2025 bolstered confidence that record levels of cruise demand will continue into the new year. Insatiable vacation demand drove Carnival to record revenue this year. We've got more with Carnival's CEO coming up in just a moment. Right now, Carnival shares, they're up by 6.7%. Rival Royal Caribbean up 3.4%. And Norwegian Cruise Line Holdings up now by 6.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, much appreciated. Charlie, talking about Carnival, as we said, earnings are out. They came out this morning. The call wrapping up about 3.5 years ago. That call, 3.5 years ago, 3.5 hours ago.
That's the type of day it's been, I was going to say, Carol.
It's been a long day. As Charlie mentioned, the stock rallying. Right now, it's up about just shy of 7%, up the most in more than 2 months. The company reported adjusted earnings per share for the fourth quarter that beat analyst estimates. They also introduced guidance for 2025 and signaled that record levels of cruise demand will continue into the new year. For 2024, the stock is up about 40%. It is so great to have back with us Josh Weinstein. He's President, CEO, and Chief Climate Officer of Carnival Corporation. Their brands, you know them. Their namesake, of course, Carnival, Princess, Holland America, Seabourn, many more. He joins us right now, Josh does, from Carnival's headquarters in Miami. Josh, good to have you here with us. Happy holidays. How are you?
Thanks for having me. Happy holidays. Carol, Tim, nice to be here. Thank you.
Hey, listen, last time we talked in September after earnings, we highlighted that nearly, I think, half of your bookings were done so at record ticket prices. Now some 2/3 of 2025 have been booked. Tell us about those bookings. Are they also at record prices?
Yeah, they are. You know, our book position, as well as we did this past year, if you look at where we are today versus same time last year, we are higher in occupancy, higher in prices. As a matter of fact, it's historical levels for both, for each of the 4 quarters for 2025. So as I heard you saying before I came on, the demand for our cruises is pretty phenomenal.
Typically this time of year, Josh, how much of the following year is booked? How different is this than historical averages?
It's not. We don't give that out for various competitive reasons, but I'd say it's nicely higher. And to give you a sense of the momentum, you know, if you think about what was our booking activity, how much activity did we generate in the last quarter? So from the period of September through the end of November, that beat last year, even though we had less to sell. So we sold more for 2025, and we sold it at higher prices versus same time last year. And at the same time, we set a record for booking activity for the following year out. So in this case, 2026. So things are moving really positively across the board. And the great thing is, this is broad based. So when we look back at 2024 and we look at our portfolio of world-class brands, we were actually higher, mid-single digit to mid-teens percentage-wise in our yields, in the revenue we generate per person per day, across all of our major brands, all of our major trades. So it's really gratifying. The team, our global team, has done a phenomenal job, and really a shout out to each and every one of them for doing what they do.
Okay, this maybe sounds a little bit stupid, but why do you think this is happening? I mean, and I'm just curious, what it is it? Tell us a little bit about it. Remind us, because you do have a portfolio of brands, and it reaches across different consumers, if you will, of your brand. So give us an idea of why you think you are still seeing kind of record bookings.
We'll need an hour, right? I mean, there's so many reasons. You know, the principle, and I remember being on with you a year ago and talking about what we'll call the price to experience ratio. And the price to experience ratio of a cruise versus the price and what you pay for a land-based alternative is nuts, right? I mean, the value that you get from a cruise for what we provide is night and day to what you can get on land, and people are recognizing that. And so we are casting a net much wider into the general population for people who will now consider cruising as a vacation alternative, people who have never cruised before. As a matter of fact, in 2024, we had over 10% more new to cruise than we did the prior year. So becoming more mainstream, breaking down myths, and that value gap is real. So we can still increase our pricing as we've been doing the last few years and be an incredible value. And I tell you, there's so many things that our teams are doing better and better every single day, from how we manage the revenue curve, right? The yield curve between the time we launch 2.5 years in advance to the time we sail. Our marketing is amazing. Our brand's doing a better job of creative marketing, getting in the consideration set, and then performance marketing and make sure we close the deal and get the booking. You name it, we could talk about it all day, but everything is moving in a positive direction.
Josh, forgive me, we have some breaking news, so I want to jump in with that. Speaker Johnson says the House to vote on a funding bill today. He said, vote on government funding. The House, he says that the agreement has been reached on government funding, and he says there will be no government shutdown. Once again, Speaker Johnson saying that agreement has been reached on government funding, and there will be no government shutdown.
You know, I got to say, Josh, there's so much coming at us, and so many individuals and leaders, CEOs that we talk to say, you know what, we're kind of holding off until we get an idea, a clear picture of what happens in 2025. You are obviously optimistic. You see numbers and data in real time in terms of bookings. But I am curious about the upcoming White House. Is it good, bad, or neutral for your business?
You know, we had a great relationship with the Trump administration the first time around. We had a great relationship with the Biden team, and I expect that great relationship will pick up with President Trump again. So, you know, our job is to deliver amazing vacation experiences to millions of guests a year around the world. That is what we do, and we do it very well. And every single year, there is something, right? Because we are global and the macro economy and the geopolitics are what they are. When I was with you a year ago today, we didn't have Red Sea on the radar screen. The Baltimore Bridge hadn't collapsed. You know, hurricanes hadn't done the damage that they did in the United States. Government elections getting thrown for a loop in Europe, like the UK and now Germany. None of that was on the radar screen, and we outperformed our December guidance by $700 million. Our job is to deliver no matter what the world might bring, and we'll continue to do that.
So I do wonder, when you look at 2025, what macroeconomic factors, what geopolitical factors concern you the most, Josh, you know, when you think about the company's 2025 performance potential?
Oh, man, you know...
Sorry, I'm asking you a question.
Yeah, that's all right. I'm not going to single anything out. I mean, like I said, our job is to deliver. We deal with whatever the world might bring. We are nimble. Our team is amazing at reacting as they need to. But more importantly, we are proactively doing what we need to do to position our ships with our guests the right way and delivering on board. So the world will turn, crises will come and go, and people will keep cruising.
You've been President, CEO, Chief Climate Officer since August of 2022. So you've been in this position for a couple of years. Relative to the last couple of years, how would you describe the health of the American consumer right now? Same, better, worse?
We're just seeing continued positive momentum. So I think it's hard to say anything, but it's just as good now as it has been for the last few years for us in particular, given the record yields that we're just coming off of, and we're building on top of that. And you got to remember, we're a global company. So yes, the United States is the biggest cruise market by far, and we're doing incredibly well in the United States, but we are also the biggest in the United Kingdom, the biggest in Germany, second biggest in Italy, second biggest in Spain, Brazil. So we have an incredible global presence. And the fact is, economic cycles come and go, crises come and go, macroeconomics will flow different times in different places around the world. So our portfolio approach of being in these phenomenal markets really serves as a great hedge for us, because things will come in their cycles and leave their cycles at different times.
So of those geographic markets that you mentioned, even those that you didn't mention, where you do operate, where you do play, where are you most bullish?
Oh, where am I not? You know, if you think about cruising, right? And you think about our brands, we're about a third of the market, let's just say in broad terms. If you take the whole cruise market and you put it into a bucket with all of the vacation alternatives at the same time, we're about 2 to 3% of the overall vacation market. And so how can you not be bullish when we are so underpenetrated as a global industry? I mean, it is remarkable what inroads we can make by just getting people who have never cruised before to consider cruising. I'll tell you what, I don't know Disney's strategy any more than anybody else does from the outside, but I do know that they talked an awful lot lately about reducing the investment in their land because they want to build more investment into cruise and double the size of their fleet. I think that is very, very telling, and I think it's a brilliant idea.
Okay. And you guys have invested in your fleet. And I'm also curious about, when I did a deep dive on the company and I got off at Grand Turk, you guys have a port there. And I am curious about these offshore destinations for Carnival travelers. How significant is the July 2025 opening of your Celebration Key private island destination to the company's full year revenue outlook? I am curious about how this moves the financial needle, these offshore ports that are yours, that you guys highlight.
Yeah, absolutely. They're a critical piece of our strategy. So even today, without Celebration Key, we've got 6 jewels in and around the Caribbean, and we took about 6.5 million guests to one of our destinations in that geography. That's about equal to the rest of the industry combined with theirs. On top of this, we've got Celebration Key, which is going to be a phenomenal guest experience built from the ground up for Carnival Cruise Line and their idea of fun and just a wonderful guest experience on board. And there's a lot that we could go into, but it's going to be phenomenal. Now, with respect to 2025, there's really not that much of an impact because we don't open until July with a handful of cruises, and then we build up. So for the corporation overall, it's only about 5% of our itineraries in 25 will touch Celebration Key. That ratchets up to about 15% when we get to 2026. On top of this, we've announced that we're doing some major investment in one of our other existing destinations, traditionally known as Half Moon Cay, and rebranded Relax Away at Half Moon Cay because it's a different vibe than Celebration Key. It is a beautiful tropical paradise, white sand beaches, and what we want you to do there is lean into the beauty and the pristineness of that location and the crystal blue waters and relax and enjoy yourself and unwind. And we're going to be able to marry these two types of experiences on the same itinerary. So you get the idyllic and the ultimate beach days across those portfolios.
Well, listen, great to check in with you. And investors are certainly respecting the optimism that you have put out, certainly in earnings and then on your call with analysts. So glad we could get some time with you. Josh, happy holidays to you and your family, and look forward to talking to you in the new year. Josh Weinstein, folks, President, CEO, and Chief Climate Officer of Carnival Corporation, joining us from Miami. Still ahead, we're going to get another look at corporate America, this time when it comes to Black workers. They were hiring them, and then they stopped. It's among our most read stories on the Bloomberg on this Friday.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Party City is going to commence winding down its operations immediately. That, according to CNN, citing CEO Barry Litwin in a staff meeting today. Litwin is said to have told staff that today will be employees' last day of employment. House Speaker Mike Johnson says an agreement has been reached and lawmakers will vote on funding the government today. Stocks holding on to gains, paring weekly losses for major indexes after fresh data this morning eased worries about inflation that have been whipped up by the Fed's hawkish pivot earlier in the week. The S&P right now up 91. That is a gain of just about 0.6%. The Dow up 691, up 1.6%. NASDAQ up 320 for the NASDAQ Composite Index, a gain of 1.7%. The Russell 2000 Index of small cap shares up by 1.6%. 10-year, 4.51%. The 2-year right now at 4.30%. Spot gold up 1.3%. That is a gain of $34 the ounce to $26.28. West Texas Intermediate crude little changed, up 0.1%. 69.43. Bitcoin has been all over the map today. Right now it is trading down by $12. We'll call that unchanged for Bitcoin at 97,323. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Okay, thanks so much for that update, Charlie. Do appreciate it. As we get ready to wrap up the new year, thinking about the new year, we'll be talking with the editor of Business Week, Brad Stone, in our 4 o'clock hour about the upcoming issue. It's all about the year ahead. And on that, if you never want to miss a Bloomberg Business Week story, unlock deep reporting and analysis from reporters all around the world and gain unlimited access to Business Week. You can find out more information at Bloomberg.com/subscribe now.
All right, now let's get to one of the most read stories on the Bloomberg on this Friday about how since the 2020 Black Lives protests, companies have focused on hiring more Black workers. And the good news, they did that, right? We saw that happen in a big way. The bad news is they have stopped doing it. With more, we welcome Bloomberg News Equality Team reporters Jeff Green and Nabila Ahmed. Jeff is in Detroit, Nabila right here in studio. Incredible reporting. I actually printed it out, and it's a really big story. And it's something we highly recommend you read on the Bloomberg and at Bloomberg.com.
It's okay, it's recycled paper, Carol. It's okay.
I just was kind of curious. Jeff, let's get to it. Corporate America did hire more Black workers, right? This story, this reporting looks like a massive undertaking. Tell us what you guys did, how you reported out the story, how you came up with the data. Lay it out for us.
Yeah, so about 3-4 years ago, we started asking companies to share these federal forms. It's wonkily called the EEO-1, and every company with more than 100 employees has to report it every year to the EEOC, which is the Equal Employment Opportunity Commission. The caveat is they are not required to give it to us, so they can keep it private. And what we've been asking and what investors have been asking is please disclose this. It's the best form out there. It's the only form that everybody fills out in the same way with the same rules. It talks about gender and race. So we've slowly chipped away. At first it was 12, then it was 25, then it was 70. Now we're basically, this year, we're up to about 97. Wow. However, what we wanted to do was look at what happened from 2000 to 2020 to 2023. And for that, we had about 84 of these S&P 100 companies with enough data, which is pretty astounding, based on where we started. But so we have 84 companies with enough information to see what did they do in 2020 from 2020 to 2021, and then what happened along the way. And we covered what they did at first last year, and this year we looked at where it went, which was not as encouraging as what we saw in the first story.
Okay, Jeff, give us some numbers, and then I want to bring in Nabila here and talk a little bit about why this is happening. What did you find this year, last year, about the pattern? Share some data with us.
Well, yeah, so between 2020 and 2021, you saw an increase. Between 21 and 22, you saw it continue but start to slow down. And then last year it reversed. Not fully, not all the way back to where we were in 2020, but to some degree, they went from about 17% at the peak for Black workers in the overall workforce to about 16.8, which is really close to where we started. So in the workforce overall, we went back to kind of where we were, which is not what you'd expect when you're trying to address a major social issue.
All right.
Yeah, Nabila, come on in here, because the big question that I think a lot of people have who are watching and listening to this right now would be, Why is this happening now? We kind of thought the progress went in one direction.
Funnily enough, progress does not go in one direction, as we can see here. And one of the biggest reasons for why this has happened is the backlash against diversity, equity, and inclusion policies that we're seeing across the conservative landscape. So it all started in about early 2022. We started hearing politicians talk about being anti-ESG and talking about being against companies that are doing woke capitalism, which is kind of a catch-all term. You know, it catches everything from environmental sustainability to efforts to diversify the workforce. So that happened. And then it picked up steam when the Supreme Court decided that college admissions affirmative action would no longer be legal. So then activists started taking that and questioning whether those kinds of policies would still be legal in the corporate workplace. And a lot of companies started reviewing those policies, changing those policies, striking the term DEI, striking the term anti-racist from their filings, and really winding back a lot of the efforts that were specifically targeted to Black people.
You know, and so are we assuming that this is going to continue? I mean, Bloomberg has done a lot of reporting about even these positions within companies have gone away, right? There were a lot of hirings of people to oversee these efforts, diversity, inclusion, ESG, if you will, and it does feel like those positions are slowly going away as well.
Absolutely, and sort of the drop in numbers is commensurate with the drop in numbers of those professionals inside of companies too. But also the broader trend does reflect what we're seeing in the broader employment market, where Black unemployment is higher than the overall unemployment rate. You've seen policies like return to office mandates really hurt diverse groups of people. And then, as Jeff said, there was a rush to hire these people post the Black Lives Matter protests. And now when workplaces are cutting their workforce overall because of other multitude of other factors, it's the last in that are the first to be out.
Hey, Jeff, come on in here because Nabila mentioned some folks who are on the conservative side, some activists. There's some bold-faced names in your piece. Stephen Miller, an advisor to President-elect Trump, who I believe is going to be Homeland Security Advisor and Deputy Chief of Staff for the President-elect in his second term. And then Robbie Starbuck as well. What influence do these two folks have?
Well, I mean, Stephen Miller has been suing, maybe not winning, but suing, which has a chilling effect. And Robbie Starbuck, to some degree, if you weren't already kind of right-leaning, came out of nowhere in June and started getting company after company to pull back on DEI. And he set a tone. I mean, the companies, and the interesting thing is most of the companies said, hey, we were already working on this. Some of them tried to say it was kind of coincidental, but, you know, either Robbie Starbuck is the luckiest man on the planet, or a lot of companies were just kind of waiting for an opportunity to roll this stuff back. And that's sort of where we are. I mean, Walmart was was the biggest company, the biggest employer, just made a compromise with him. We also kind of wrote through that a week ago. Should read that story as well. But it kind of shows where we are. Corporations are looking for ways to compromise and to avoid some of this entanglement. It is not at all the atmosphere we had in 2020 when companies basically said, we can't do enough to fix this inequity.
Yeah, and you know, it was interesting. I was looking at some reporting in October. Bloomberg reported out that white men who make up the majority of 28 chief executive officers were paid bonuses for meeting their company's diversity, equity, and inclusion goals last year. Some analysis by Farrington Advisors. They're an executive compensation consulting firm. But, you know, we're seeing, you know, if it's not a priority, if your compensation isn't tied to it, Nabila, like I do feel like it's not going to be top of mind for executives.
That's exactly the question that everyone's pondering, because a lot of these companies are still saying that they remain committed to diversity in the workplace. And then the question then is, okay, but what are the signs of your commitment? Because if you do take away some of those metrics by which you measure this, why should an executive go out of their way to try to do it?
Jeff, just got 20 seconds here. So outlook here, does this just continue? You know, it is kind of amazing how the narrative and the thinking by executives have changed coming off of George Floyd and Black Lives Matter. But does you expect this trend of less Black hiring to continue? And forgive me, just about 20 seconds.
There is that thought because the Trump administration is also not friendly to anti-DEI. And there's probably not a lot more room for Black people to gain. I mean, white people actually gave up power. They just didn't give it to Black people. So we're kind of in this strange situation going into an anti-DEI environment where you wonder, where is there any road left?
All right, incredible. This is it. It's really thick. I printed it. Jeff Green, Nabila Ahmed. Highly recommend you check it out on the Bloomberg. Coming up, we're talking about those drugs.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, yes, indeed. You are listening and watching Bloomberg Business Week. Carol Master along with Tim Stenevec. We are going to get to those drugs. That was a bad tease on my part, but I wanted to talk about those drug makers that are moving today.
I think that gets people to watch and listen. If you hear about those drugs, they're like, what drugs? Well, so I think it's a pretty successful tease.
It's Friday. It certainly is. Novo Nordisk, shares of their ADR is falling by the most on record today after a failed attempt to leapfrog rival Eli Lilly in the red-hot market for obesity drugs. So those are those drugs companies and their shares that are moving in a big way, Tim.
Yeah, Novo's experimental obesity drug helped patients lose an average of 20.4% of their weight over 68 weeks. That's short of the 25% weight loss that Novo had repeatedly predicted for its next generation product. So let's get to it with Bloomberg News healthcare reporter Robert Langrith, who joins us from New York City. Bob, big news, a huge reaction out of shareholders of Novo Nordisk, which surprised me a little bit because it still seems like, helping lose an average of more than 20% of weight is a pretty good result.
Yeah, I mean, in an overall objective kind of like broad way of looking at it is these results are good. I mean, in terms of obesity, to have another drug that can help lose 20%, that's great. The problem is that it's, much less than investors are hoping for, and much less than Novo Nordisk itself had been promising. They led investors to believe that this drug might get a 25% weight loss and be better than Lilly's rival drug Zepbound. They didn't achieve that in this study, so this really disappointed investors who were hoping for more in that and sent their, the stock way down. It's sort of a lesson in the perils of overpromising.
Well, Bob, is this kind of what that GLP-1 drugs now are all about, percentages and which drugs do the best? Because if I'm a consumer, I don't want 20% when I can get, 25 or 28% from another drug, no?
Yeah, I think it depends. I mean, it's not totally clear. Actually, not totally clear whether everyone needs like way above 20%. There, I know people on some of these drugs that don't even go to the highest dose because they want to lose weight a little bit more gradually. So it's not, totally clear, whether everyone wants that. One interesting feature about this study is a lot of these studies, to get the maximum headline number, they kind of like, unless you're having so many side effects you can't, they keep you going up to the highest possible dose. In this study, patients actually, as I understand it, patients actually had a choice in this Novo study, and only 57% of people actually got up to that highest dose. And we don't know the details on that. Was that because they thought they were having too many side effects, or is that because they were like okay with the rate of weight loss to the lower dose? But in any case, that little wrinkle in this study, may have ended up hurting Novo Nordisk in terms of the headline number that they are able to produce. So very interesting.
So Novo Nordisk's loss was Eli Lilly's gain. Shares up about 1.6% as we speak right now. Shares were higher earlier in the session. Is this good news for Eli Lilly?
Well, it's good news in the sense that if no one else, Zepbound right now, their drug Zepbound, which is the obesity version of the drug that's sold for diabetes as Mounjaro. So Zepbound is kind of the unrivaled, in terms of drugs on the market for obesity, they have a kind of unrivaled efficacy. Zepbound had a head-to-head trial with Lilly's Wegovy and showed, that it produced more weight loss than Wegovy. So right now, they're the only one in the market that, can show they can produce 20% weight loss. And this CagriSema from Novo is, potentially something that could have dethroned it, and it didn't today. It basically produced, similar weight loss results, but it's years behind. So yes, that is good for, for Lilly, but there's lots of competitors out there. Novo itself is doing more studies of CagriSema. They actually do have a head-to-head study of CagriSema versus Zepbound going on. So, we'll see what all these produce.
Well, I do wonder too, though, Bob, what is progress in the GLP-1 drugs? Is it, the ability to lose more weight? Is it the ability, I too know people on it, and some that have reacted where they get, really nauseous. They have a lot of side effects. So is it that a better drug will be one with less side effects? Like, what's going to be progress in this world?
Yeah, it's a very good question. Kind of in my mind, there are several categories of progress. So we saw kind of big leaps. First was Ozempic Wegovy. That was like the first big leap. And then there was like Zepbound that took the weight loss to a new higher plane. And now my perception is, it appears to be kind of the rate of progress in terms of dramatic progress appears to be slowing down a bit. and we've had like a number of, drugs that have produced, somewhat, less than exciting results. There was an Amgen drug that was like a monthly or less dosing called Maritide that everyone was excited about, but then they came out with some recent data suggesting, there may be a high rate of vomiting side effects with it, and that really disappointed investors. Pfizer was working on some oral drugs and had some setbacks on pill drugs. So it's starting to go slower, but I would say there's like several different categories of improvement. One is, as you said, be great to lower the rate of nausea and vomiting with these drugs. I don't think we've really seen that so far with next generation. In fact, some of the next generation ones have founded to kind of have with the opposite problem, like hints of worse on that front. Well, the obvious other possibility, besides the super obvious one of more weight loss, but the obvious other possibility if you can't produce a lot more weight loss is, just more convenient formulation. That would be, a daily pill. A lot of people, if you get a daily pill, a lot of people would just so much more convenient. A lot of people would take it, even if the weight loss wasn't quite as much as like option number one before you went to like some injection.
Makes complete sense. Bob, forgive us, we're running out of time, but we know this is going to be a story we're going to continue talking about in the new year. Of course, that is Bob Langreth, Bloomberg News healthcare reporter. For those who are watching on TV, the close is coming your way in just a moment. Tim and I continuing on Business Week. This is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. There's a midnight deadline to keep the government running, and House Speaker Mike Johnson says there is an agreement among Republicans.
We have a unified Republican conference. There is a unanimous agreement in the room that we need to move forward.
Johnson did not provide any details. House Majority Leader Steve Scalise.
We're talking through different options. Obviously, within our conference, we're looking at the different options to keep the government running, to provide disaster relief, and to help our farmers.
But it reportedly punts President-elect Trump's demands for a debt limit increase. Trump said this morning, if that's not included, let the closures begin. And it's unclear how Democrats will vote. CBS's Ed O'Keefe is at the White House.
Bipartisanship is what's needed to get these big bills passed. And so far, at least Republicans signaling this morning again, they have no intention of negotiating with Democrats. So as long as that continues, all the White House does is tell federal agencies and the federal employees potentially affected, prepare for a shutdown that would begin at midnight tonight. If you're deemed essential or non-essential, you know what to do. And eventually, no matter how long an impasse runs, you would get your back pay.
Millions of Americans are crowding the roads and airports today for the holiday getaway. Correspondent Chris Van Cleve is monitoring things in Seattle.
The airlines are expecting a record of more than 54 million flyers between now and January 6th. American says its peak of the peak, if you will come on Sunday at about 1:20 Eastern Time, when they'll have 1,074 flights in the air simultaneously. Next busy day at the airport Sunday, and then the Friday after Christmas.
Striking Amazon workers continue walking the picket lines today at 7 delivery hubs.
They made $30 billion last year, $30 billion with a B, so we think they can afford to give us benefits, give us a living wage.
In Damascus, Syria. The celebrations continue after the fall of the regime and a visit today by a U.S. delegation. Michael Toscano has that.
The first U.S. diplomats to visit Syria since President Bashar Assad's ouster have met with provisional officials in Damascus, reportedly telling Syria's new leader, a one-time supporter of ISIS, that efforts to arrest him are stopped, and they are seeking information on the whereabouts of missing American journalist Austin Tice. This as the U.S. conducted airstrikes in northeastern Syria, killing a leader of the Islamic State group, according to the U.S. Central Command, an effort to prevent ISIS insurgents from regrouping there. Michael Toscano, CBS News, Washington.
On Wall Street, the Dow currently up 647 points. This is CBS News.
BritBox.com.
There's Black Friday and Cyber Monday, and Deborah Rodriguez reports tomorrow is a shopping day for holiday procrastinators.
The National Retail Federation expects more than 157 million people to cram in last-minute Christmas and Hanukkah purchases on Super Saturday. That's about 46% of everyone in the country, an 11% increase over last year. Not all will leave their homes to get the job done. The Retail Federation expects 1 in 4 will shop online. As for what they'll be looking for, the NRF's holiday survey finds 50% plan on buying clothing, 32% will be scooping up toys, 26% purchasing gift cards. Deborah Rodriguez, CBS News.
Amazon's recalling 500,000 power bank chargers over a fire and burn hazard. The Consumer Product Safety Commission says it's received 40 reports about the device known as CharMast. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we're just about 55 minutes away from the closing bell on this Friday, getting ready to wrap up the trading week. And we've got a little bit of bullish tone.
Happy Friday.
Not even a little bit, right?
Yeah, comparing some of the losses that we've seen this week, the S&P 500 up 1.5%, so it brings the week down just to 1.6% to the downside on the S&P 500.
Yeah.
On the NASDAQ composite, down 1.3% on the week, but up 1.5% today.
Yeah, and pretty broad-based. You've got most names
really
in the S&P 500, right? Like
yeah, there's only 31 stocks in the red in the S&P 500
Pretty
right now.
amazing.
Tough day to be to find decliners.
Sorry.
Yeah. It's okay. I got a few. Thank you, Novo Nordisk.
He does. I'm Carol Masser along with Tim Stenevec. Coming up over the next 2 hours, guess what? The SPAC is back. Everybody.
Yeah, Bailey Lipschultz standing by. He's going to be joining us in just a few minutes. You know, he is our king of SPACs.
He is our king of SPACs.
Yeah, he's our king of SPACs.
He's the king of a lot of things.
Move over, Chumoth. Bailey's our king of SPACs. Also ahead, could be a frantic period of holiday travel.
Wacky.
Yeah, I know. That's because I'm getting up at like 3 in the morning to get on an airplane.
Oh, tomorrow?
Yeah,
Oh,
that's
okay.
right. Yeah.
All right.
Haven't packed yet.
Okay.
It's not a private jet.
No, it isn't.
No.
We're going to talk private jets with the CEO of the fractional aviation firm FlexJet. Curious, a lot of these folks, man, were off and running during the pandemic, right? People flying, tapping into this. We'll see where they are right now. What it says maybe about parts of the economy and the willingness to spend on private aviation.
What part of the economy?
The rich,
tippy top.
The tippy top. Yeah.
Hey, the year ahead.
Yeah.
How are you feeling about it?
I have a lot of questions, but I think most people do.
Okay. Well, we got an optimist guide to the new year. Business we Getter Brad Stone is stopping by.
Yeah, and then how about a professional taster?
Yes,
apparently
please.
it's a thing.
Can I be? I would like to try chocolate all day, every day.
He eats all the time. He'd be a great professional taster. All right, folks, more to come. A lot over the next 2 hours. Right now, though, let's get another check on your trade and some of your top business stories. Once again, Charlie Bell.
Hi, thank you very much indeed. 53 minutes to go until the closing bell with the Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000 solidly in the green, right to the numbers. Here's where we stand. The S&P up 83 right now, holding on to gains. Final hour of trading of what will be the final full week of trading for 2024. S&P right now up 1.4% even, so as Tim mentioned, on track for a losing week. We've got the Dow up 631, up 1.5%. NASDAQ also up now by 1.5%. And the Russell 2000 index of small cap shares up 1.3%. 10-year 4.52%, with the 2-year 4.31%. Spot gold up $32 the ounce, up now by 1.3%. West Texas Intermediate crude oil up 0.1%, and a retreat now for Bitcoin down 0.4%, 96,961. The Fed disappointed markets this week with a forecast of just 2 rate cuts next year, half as many as the previous forecast in its SEP, the Summary of Economic Projections. San Francisco Fed President Mary Daly told Bloomberg Radio this morning her forecast is not driven by policy changes that could be coming under the Trump administration.
It's about the data. It's always about the data for me. We don't know what the incoming administration is going to do. You know, new administrations, no matter when they come, always put a slate of programs together. And really, as a policymaker, I want to see the net effects once I see clarity about what those policies will be.
San Francisco Fed Chief Mary Daly interviewed on Bloomberg Surveillance. After earnings right now, we got FedEx up by 0.5%, rival UPS up 2.6%, and a declining stock for Tim. We've got Nike down 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Do appreciate it. Well, there are many well-established symbols of the froth building yet again in the financial markets.
Yes,
Charlie mentioned one of them,
Have you seen Bitcoin?
Yeah, that's what I'm talking about. Hovering around $100,000. The NASDAQ hitting record high after record high. For that matter, the wild bidding war that broke out in Manhattan a few weeks ago for the banana and duct tape art.
We had our own. Somebody taped up an orange here in the studio and was
it's
like,
not going to set you back
bid
$6
on
million,
it.
$6 million bucks.
Crazy.
There's also this, the SPAC and its band of patrons and peddlers is back. Bailey Lipschultz is our SPAC king. He's senior equities reporter for Bloomberg News. He writes about this speculative corner of the market, and he joins us from New Jersey. Why are SPACs back?
That's a loaded question, Tim. There's a number of reasons why SPACs are back. I think from the sponsor's perspective, so from the Howard Lutnicks, the Michael Kleins, the Harry Sloans of the world, from their perspective, people need to go public. So why not take advantage of now, pool together some capital, maybe wait because they have 2 years to strike a deal, and hope a bit of this froth comes back and shows up for earlier stage investments, and maybe that long-awaited return of initial public offerings will really pop in 2025. That's the argument, at least from the sponsor perspective.
All right. Listen, we've seen cycles before. I look at the SPAC index, the IPOC SPAC index, up nearly 20% since August, yet only 8% higher year to date. Is this just going to be another cycle, or is there something more substantial here, Bailey?
I think it will probably be a cycle. The argument from the SPAC community is that at least the people coming back have experience. They know how to get deals done. But one of the things we dove into in the story is how atrocious a number of those deals actually were in the long run. Taking companies public that are down 99% is a black eye for the entire industry. I think it'll be interesting to see how this plays out, just because from a sponsor's perspective, again, from the Lutnicks of the world, they're putting in a few $1 million to create this. So they have some sunk costs that they want to recoup on the back end if they take a company public. The real debate at the end of the day is, do you take a crappy company public and at least have a chance to make some money, or do you take your lumps and shut down the SPAC and give money back, which is something we saw Bill Ackman and a number of other SPAC backers who kind of dabbled in the game do back in 2022.
All right, we're going to leave it there. Don't be mad at us, but we know you're in your cozy home, and it looks like a SPAC throne right there. But we want to get to the latest on D.C. because there's a lot going on. So, hey, listen, happy holidays, and look forward to talking to you more in the new year. Bailey Lipschultz, he's our equities reporter at Bloomberg News, a must-read, certainly, on the Bloomberg terminal.
Hey, so let's get to D.C. because House Republicans said they will vote Friday on funding to keep the government open through March 14th, provide disaster relief, and give billions of dollars in economic aid to farmers. For the latest, we go to Michael Shepard. He is senior editor for technology and strategic industries for Bloomberg News. He joins us from Washington, D.C. Michael, what do we know about what's in this latest package that seems like it will get support from Republicans and Democrats?
Well, it's unclear about whether it will get enough support to get over the line. You did outline the key components, though, and that is enough funding to carry the government over until March 14th, as well as provide billions of dollars in critically needed disaster relief and aid for farmers who've been hit economically over this past year. But there is one provision missing that Donald Trump, the president-elect, and one of his key advisors, Elon Musk, had insisted on having included, and that is an elimination of or suspension of the debt ceiling, which goes back into effect on January 1st. And that remains a loose end that could tie things up again. Likewise, it's unclear whether Democrats actually will support this measure. Remember, there was a deal that was agreed on that was on course for passage. They even had text of the bill until Wednesday, and that's when Trump and Musk intervened and upended the process. Last night, we saw a bill that both Trump and Musk had embraced go down in flames in the House, with not only all Democrats, but 38 Republicans voting against it. So this is far from fully baked, and we'll have to see how this unfolds over the next few hours.
Yeah, that was pretty remarkable to see that happen last night, especially after the support from President-elect Trump and Elon Musk. I do want to listen to what Mike Johnson, Speaker of the House, said just a little earlier this afternoon.
We have a unified Republican conference. There is a unanimous agreement in the room that we need to move forward. I will not telegraph to you the specific details of that yet because I've got a couple of things I got to wrap up in a few moments upstairs, but I expect that we will be proceeding forward. We will not have a government shutdown, and we will meet our obligations for our farmers who need aid, for the disaster victims all over the country, and for making sure that military and essential services and everyone who relies upon the federal government for a paycheck is paid over the holidays.
All right, there you have it. That is Speaker of the House, Mike Johnson, just earlier this afternoon, Carol.
Michael Shepard, I mean, man, how many times have we been through this before? Are we feeling like, okay, this is it, this is going to go through, we're not going to get some late story tonight that, we had some problems?
You know, Carol, we have seen this movie so many times before. And if you remember 6 years ago when Donald Trump was in office, we had a holiday shutdown that lasted 35 days, the longest federal shutdown in U.S. history. So this is a movie we have seen before, and it's playing out again before our eyes. And the concern is that it may go off the rails again tonight, the way it has in previous budget battles, where lawmakers have been willing to, you know, really take brinksmanship all the way to the point of a government shutdown. And we've seen the Biden administration make clear today that they have instructed federal agencies to proceed with plans to start wrapping up operations and shutting things down if need be.
All right, good to know that. Michael, what I do wonder too, is this just kind of a reminder that in order for things to happen, yes, there are things the president can do through executive orders, but you know, government works through legislators and legislating. And this is a reminder that Congress can do or not do a lot of things.
Yeah, that's right, Carol. And it's important to remember that even with Trump and his incoming majorities in the Senate and the House, they are not big majorities, especially not in the House next year. He will, in fact, start the year with maybe a one-seat advantage in the House, and that will make it very difficult for him and his Republican allies, including the current Speaker of the House, Mike Johnson, to power through much of his agenda. And so consensus is important, and outreach to Democrats. It was interesting in Johnson's comments that we just played, he did not mention that sort of outreach and participation by the other side of the aisle in these negotiations. So getting a sense of whether that consensus will work, those negotiations are going to start happening next year. We're getting an early taste of it right now. Trump doesn't really quite have the mandate to simply power through. And also, as we saw last night, Republicans don't necessarily, even Republicans don't necessarily like to be told by the president what to do. The Republicans in Congress, they are a third branch of government, and especially on spending, Congress controls the power of the purse. They don't want to have that power usurped, say, by the executive branch.
Yeah, but I do wonder to what extent, and just in 30 seconds, they could get primaried and with the backing of someone like Elon Musk, who we know is there and ready to spend. Just 30 seconds.
Well, that is an open threat by Trump, and it is one that he is using or trying to use to his advantage. And we'll see how Republicans respond to that and whether they fall into line on this bill tonight.
Right, or whether Democratic fundraisers say, well, wait, we'll help you, Republicans. We'll primary you. We're setting up for another interesting year. Michael Shepard, thank you so much. Hope the evening does not go too long for all of you. Senior Editor for Technology and Strategic Industries for Bloomberg News there in our D.C. Bureau. Coming up next, we're going to talk a little bit about venture capital for the new year.
Yeah, wrap on 2024 and then a look ahead to 2025. EY's Jeff Grabo joining us next.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks holding on to gains. 39 minutes to go ahead of the closing bell with the S&P 500 index up now by 76. That is a gain of 1.3%. Stocks are ticking higher in afternoon trading, pairing weekly losses for major indexes after fresh data eased worries about inflation that have been whipped up by the Fed's hawkish pivot earlier in the week. Again, the S&P 500 index up now by 1.3%. The Dow also up 1.3% at 42,903. NASDAQ up by 1.3% as well. The Russell 2000 index of small cap shares gaining now by 1%. 10-year 4.52% with a 2-year 4.30%. Gold up $32 the ounce, up 1.2%. West Texas Intermediate crude up 0.2%. Bitcoin down 0.3%. 97,069 right now on Bitcoin. A major unknown for markets is the potential impacts of new policies from the incoming Trump administration. Christina Hooper is Chief Global Market Strategist at Invesco.
I'm actually more concerned about mass deportation in terms of its impact on inflation than I am about tariffs. Tariffs can be threatened, they can be quickly removed. Deportation is a much more significant, more permanent kind of situation. And of course, where we know a lot of inflationary pressures come from is the labor market. So if we have a tight labor market, especially in certain industries, that tightens further, that can be very problematic.
Invesco's Christina Hooper interviewed on Bloomberg Open Interest. Carnival's initial outlook for 2025 has bolstered confidence that record levels of cruise demand will continue into the new year. Carnival Corp up 6.6%, rival Royal Caribbean up 3.5%, Norwegian Cruise Line Holdings up by 6.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Do appreciate it. In the third quarter of this year, the most recent for which data is available, venture deal making hobbled along at a slightly better pace than last year ago. This is in dollar terms. Cash, though, went to a handful of companies. It underscores the increasingly selective spending in the sector. Hello, AI. There were an estimated 3,777 U.S. deals for $37.9 billion in the third quarter. It's about an 8% uptick in the value of transactions compared to the earlier period. This is according to data from PitchBook. Again, this is for the third quarter,
right?
Because that's the most recent completed quarter we have.
Nobody talking about a record year, though, right?
No. I mean, you have to go back a few years to see that. The question is, what will things look like in 2025 on that front, and then also on the IPO front?
It's a great question. We've got a great guest to dig into that. Jeff Grabo is back with us, U.S. venture capital leader over at EY, joining us from Palo Alto. Good to have you here with us. Before we get into your outlook, you're in the right place to be talking about kind of what's going on in the venture capital world. But
just got to step outside on the Sand Hill Road and go and talk to the folks who are actually spending the money.
What's going on? I mean, talk to us about, creation of new companies, money going into them, where they are in those, venture rounds. We've talked for years about how much private money is out there enabling startups to stay private for a lot longer. So tell us about kind of the end of 2024 and then looking into 2025.
Yeah, so 2024 ends on a high note. Q4, we kind of flash numbers where we're seeing right now we're about $60 billion, which is an up quarter. 2024 is about 178. Probably it'll flash in a little higher than that. It's the first up year in 2 years, and it's actually the third highest year on history. And as you were talking earlier, you got to go back to 2021 to see the peak, and we're still we're a bit off that, and probably a bit a ways from seeing that again. It's the 7th straight year of $100 billion raised by venture-backed startups. One of the things we have seen, the deal count has continued to drop. It's the lowest deal count since 2013. And the activities you alluded to earlier is extremely AI-driven. Many of the top 10 deals in the fourth quarter were AI deals.
What happens if you remove some of the big deals from this, the OpenAIs, the Anthropics, and I don't know, maybe the SpaceXs of the world? What happens if you remove those huge ones?
Well, the mega round deals have been driving a lot of the activity for quite some time. And I think it's even it's as pronounced as it's been in its impact. If you didn't have AI, the tone of the story would be extremely different. You'd be doing comparisons to 2001.
That's interesting.
I am also curious that you said that the deal count has been dropping, and we talked AI. How much money is really, going into AI, and are then some other ideas, some other ventures not able to access the capital they need because of that?
Well, I mean, we've got, there's going to be a have and have-nots environment, because if you're raising today, you don't have the baggage of the past. We've come through a peak period, and there's a lot of companies that haven't raised in a couple of years, and that's kind of like the length that people like to have in their pipeline of cash. So they're coming back into market in a very different environment, and the bar has gone up, and a lot of times these companies haven't produced a lot of increase in their business outlook. So that it makes it very hard to raise. So that's driving less activity on some of those companies. And then on the flip side, you have the haves, which are definitely AI driven.
We talk about crowding out in the public markets in the sense that, this year we saw NVIDIA absolutely just dominate when it came to the index level, other mega caps as well. Does that happen in the startup world, where the mega deals that are driving the volume here are crowding out funding of smaller startups?
Well, I wouldn't say it. I think the phenomena that it has is it promotes others to go to market to kind of match the pace. So if a large language model goes out and raises a large round, you're apt to see others try to keep pace, because now we're potentially playing in an environment where cash is a weapon, and you don't want to be low on ammunition.
Yeah.
Go ahead.
No, go ahead.
I was going to say, does that change going into a different administration, and especially in an environment where many thought, if we were talking a year ago, we'd think that rates would be a lot lower than they are now. But still, investors do think rates will move lower in 2025. In a lower rate environment, does it make raising cash easier?
Well, when you think about the fund formation side on the equation of capital moving into the venture asset class, if there's less yield in the market, that pushes people to higher risk opportunities to gain yields. I think, the environment that we're seeing this feels very much like 95, 96 at the birth of the internet. And a lot of people talk about that. There's some similarities, there's some differences. A lot of infrastructure is being built right now. Kind of the ground floor is being laid. So that's why we're seeing so much capital being deployed. The internet was a consumer adoption story. Consumers adopt at a different rate than enterprises. But I think if you go back, 10 years from now, I think we'll look at an up into the right trajectory.
Well, you say it's going back to the mid-1990s. We all know what happened at the end of the 1990s and into the early 2000s. So I'm chuckling a little bit, but does it end with a whimper the same way that the dot-com crash did?
Well, the interesting thing that's going on right now that I find fascinating, we've never been in a scenario like this, is, we're coming off normally it has been more of a boom-bust environment, but we've, come from a peak, probably going from 2015, 2016 through 2021 of seeing a huge ride up and then coming down for a couple of years. But now with AI, we're booming again. So normally we've been in boom-bust cycles, and now we haven't even really rationalized the downside, and we're off on a boom again with a great, technology opportunity.
Hey, Jeff, a couple of things I wanted to ask you. And in regards to AI, one of the stories that has really popped up in a big way in the last 6 to 12 months is powering AI, what's necessary in order to do all those computations, data computations. Having said that, I am curious about VC money going into that area. We know some of the big tech companies, whether it's Meta, whether it's Alphabet, and others are, certainly investing in energy needs, hooking up with energy companies to build out nuclear and other forms. But I'm just curious what you are seeing in the VC world on that level.
Well, we've seen upticks in, kind of energy deals, energy-related deals. I think this is a good opportunity for a wide variety of solutions to come in and solve that problem, because the energy demands with the amount of, data center infrastructure that's being put in place is immense. And something needs to happen to help solve that, or else energy could be a bottleneck in the deployment. So, and typically when we have these kind of challenges, technology comes to play. So hopefully we're going to see scenarios that, and it's going to be a mix of, it will be a mix of solutions. I don't think there's necessarily a silver bullet out there, but I think it's going to be a mix of, nuclear generation, thermal reduction of energy, consumption, cooling of data centers. A lot of these things will come into play, and hopefully it will be able to continue to have its rollout.
Hey, one of the other things I wanted to ask you, there's venture, right, and capital raises in different rounds, if you will, and then usually it leads up to an IPO. But we have a great story by our Sarah McBride earlier in the week, and it says secondary transactions involving venture-backed startups are on track to hit a new high this year as companies like OpenAI, SpaceX, and Stripe organize tender offers to get employees paid, and investors look for ways to offload stakes outside of initial public offerings. I am curious, do you think that continues? And is that kind of, I don't know, problematic for, the venture world, who is always looking for kind of their exit?
Well, they're getting rid of part of their stakes, and it's helping them work with their LPs, because the people that give them money, a lot of these are pension funds, and pension funds have monthly obligations to put checks in the mailbox of their pensioners so that they can eat and survive. So it's a part solution. We're hopeful that 2025 you're going to start to see a comeback in IPOs. I think it's going to take a little bit of time to happen, but the IPOs will provide most of the venture returns, I believe. And we were at our Strategic Growth Forum just right after the election and talking to some of the exchanges, and their phones had started to ring. So I think a lot of people will start to look at this path, and that's that provides more returns than secondary offers, because you're taking a discount. You're taking a discount to market to get a secondary done.
All right, got to leave it on that note. Jeff, thank you so much for finding time for us. Have a good New Year. Happy New Year and happy holidays. Jeff Grabo, he is U.S. Venture Capital Leader over at EY, joining us from Palo Alto.
Hey, we're less than a half hour to go. We're seeing stocks off their best levels of the day. Still up on the S&P 500 by a full percentage point. The NASDAQ off of its best levels of the day as well. Up about 0.9% as we speak, Carol.
Yeah, and most names in the S&P 500 are higher, 448, just 54 the downside. And yields have backed off, and this is a big reason why you're seeing also some enthusiasm come back into the market. It has to do with that inflation print earlier today. You've got a 10-year note right now with a yield of 452, 2-year note with a yield of 430. And, you can expect, as we look forward to the Christmas and Hanukkah holidays, the holidays kicking into full gear next week, that investors maybe just kind of, I don't know, will it be interesting to see whether things just kind of slow down, and Monday, Tuesday being pretty quiet.
You didn't mention Festivus.
Festivus.
It's on Monday, in case anyone's wondering. So go and get out that Festivus poll and get it ready.
It's a real holiday.
It is a real holiday. Thank you to the Costanza family for bringing that one into the conversation.
My God. We are counting down to the close. 26 minutes to go, folks, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got 20 minutes left in the last full week of 2024. The Dow, the S&P, NASDAQ are all advancing. S&P right now up 78, up by 1.3% as stocks tick higher. The Dow up 644, up by 1.5%. NASDAQ up 234, up by 1.2%. But right now we are looking at a weekly loss on the S&P, down by about 1.8%. 10-year 4.52% with a 2-year at 4.31%. Spot gold up $31 the ounce, $26.25, a gain of 1.2%. West Texas Intermediate crude oil up 0.3%, $69.61 a barrel. And Bitcoin now down by 0.6%, 96,772 on Bitcoin. Novo Nordisk shares falling by the most on record after a failed attempt to leapfrog rival Eli Lilly in the red-hot market for obesity drugs. Novo's experimental obesity shot, Kagesima, helped patients lose an average of 20.4% of their weight over 68 weeks, short of the 25% weight loss that Novo had repeatedly predicted. Right now, we've got Novo Nordisk down by 17.5%. The Lilly shares are gaining 2.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 18 minutes left in today's trading session, getting ready to wrap up the Friday trade and also, of course, the week trade. But we do have stocks just coming off or just off their best levels of the session. Charlie breaking down those numbers, but more than 1% gains on the S&P 500, the Dow Jones Industrial Average, and the NASDAQ 100. And as we've been saying really throughout the day, broad-based buying. And so investors coming back into the market after quite a sell-off following the Fed decision on Wednesday.
Okay, let's talk a little bit about equities, but also about alternatives. For that, we get to Miguel Sosa, head of market research and strategy at the institutional alternative asset manager BlueRock. We've got about $18 billion in assets under management. Miguel joins us from beautiful and sunny San Diego, California. I haven't even checked if it's sunny in San Diego, but I assume it is, Miguel. Is it nice there today?
It is about, we're seeing about 70 degrees today. Unusually warm for December, but yes, thank you for having me.
Sounds kind of dreamy.
Yeah, it sounds nice. I look outside and there was some snow happening out here in Manhattan a little earlier. I want to talk with you just a little bit about the market environment as we wrap up the year here, how you're thinking about deploying new assets, and just get your view on a week that, kind of got a little bit of a reset from the Federal Reserve. What are you watching?
Sure. Yes, so it was an interesting week for sure, only because the Fed, as you mentioned, cut rates, and yet markets reacted, call it pessimistically or bearishly. But we see that as a short-term hiccup. In our view, inflation continues to moderate. The Fed has communicated that they're not going to be as aggressive in cutting rates in 2025. And we at BlueRock see that as a Goldilocks scenario where rates are not going to go back to their 0% rates or levels that we saw several years ago, but we're behind the 5+% peak of federal funds rate. And so it still is a lender's world versus a borrower's world a few years ago. So in our view, alternative private credit continues to be attractive. And for the other alternative classes that we see, private real estate is also starting to see stabilizing, if not hopefully soon, decreasing cap rates, which will act as a tailwind instead of the headwind that real estate has seen in the last couple of years.
I want to ask you on the real estate alt asset class. Our Patrick Clark, Neil Callahan, and Jack Siders putting out a Bloomberg Businessweek story earlier in the week, and it basically said, the headline on it is office real estate is facing, quote, a year of reckoning in 2025, and just talks about commercial real estate bracing for losses in the new year as lenders run out of patience and borrowers struggle to refinance loans due to high interest rates. Delinquencies are rising. Over 10% of office building loans in arrears. Some owners are selling properties at a loss to avoid foreclosure. What is your read on office property right now?
We at Blue Rock don't disagree with that assessment. One way to phrase it is that office is potentially under-demolished, meaning that there is a lot of supply, and although companies try to implement return to work, it's hard to drag workers back into the office for 5 days a week. And so we've divested and stayed away from office for several years now. We see opportunities in other sectors. Office will continue to be challenged. And so some of them may be converted into multifamily residentials. It's hard to really turn an office space into an infill or call it an industrial specialty type of space. But office will continue to see challenges. At the end of the day, what really matters is, can a given space, whether it's office or whether it's another sector, generate income through leases?
Miguel, so what within commercial real estate do you like? Where do you find, what's opportunistic, I guess I should ask, and maybe looks poised for a good year in 2025?
Sure. We see a couple of opportunities. The first one is the industrial sector. Us here in the U.S., myself guilty as well, continue to buy more things online. And that drives demand for industrial warehouses that are close to city centers. At the same time, we're also seeing opportunities in the specialty sectors. So there's a little bit of a hodgepodge of all the real estate sectors that don't fall under the big four categories. You can think of data centers, life sciences, senior housing, student housing, but in our view, really data centers is a key opportunity because of our insatiable demand for more and more data and more video on our phones.
How are you investing in data centers?
There's a couple of opportunities to invest. We see, in our view, what comes across our desk is direct co-investments to large built-out data centers, both in the U.S. as well as abroad. In our view, what we do then is offer that to individual investors. So we see ourselves as an access point for those larger direct investments, whereas individual investors can contribute as low as $2,500 to our commingled products.
Private credit. You know, one of the things I think we still talk about, we were talking with, was it S&P Moody's yesterday?
This week, yeah.
Yeah, and just, you know, the lack of transparency and disclosure in the private credit world, as increasingly folks are looking for more investors, more retail investors to be able to tap into the private credit world. What are your concerns as someone who has been investing in that, you know, world and providing that opportunity? What is the one thing we should be watching out for within the private credit world?
Private credit has grown into a very large space in the last several years. And to your point, it can be concerning when a space grows very quickly. We at Blue Rock see ourselves as offering alternative private credit where the appeal is there of private credit, of high yields and relatively low volatility, without some of the latent risks or with additional complements. Our view is that some of the larger concern is that private credit is not traded. And so sponsors and asset managers that do invest in private credit have to hold it to maturity. And at their best or fair value, believe that it will pay at maturity until it doesn't. Right? So it's a very almost binary scenario. Yeah. Certainly there's somewhere in the middle. But if there isn't that opportunity, then it's very hard to get out of those spaces. So in other words, just because something is low volatility doesn't necessarily mean it's low risk.
All right, some words of caution and some thoughts on that. Miguel, thank you so much. Really appreciate the conversation and look forward to continuing in the new year. Miguel Sosa, Head of Market Research and Strategy over at Blue Rock, as we mentioned, Tim did in the intro, $18 billion in assets under management and in the alt asset space, something that we talk a lot about, whether it's private credit or certainly the real estate and commercial real estate in particular. So just a few minutes left here in the trade, 10 minutes.
Yeah, seeing some green across the screen, 1.3% up on the S&P 500, the NASDAQ up by 1.2. We drive to the close after this.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, just about 6.5 minutes to go until we wrap up the Friday trade. What?
Oh,
you look possessed over there.
I feel possessed.
Are you possessed?
Yeah, possessed by the most read stories on the Bloomberg terminal.
Well done, well done. Hey, this story, I don't know, since the minute I read it this morning, I've been dying to talk about it. So, and it's been a busy news day.
You did send this one early, and you were trying to get us to do it on the show, and I just ignored it.
Elizabeth, our video producer, and I was like,
we're not doing it, except for right now. We are doing it.
We are doing it. So lucky you, everyone. President-elect Donald Trump transferring about $4 billion worth of shares in his media company to a trust that is controlled by his eldest son, Donald Trump Jr.
The soon-to-be president, who was the largest Trump Media and Technology Group Corp shareholder with nearly 115 million shares, will now directly own 0 shares and be the trust's sole beneficiary. This is according to a filing with the SEC.
Yeah, according to a separate filing last night, Donald Trump Jr., quote, has sole voting and investment power over all securities owned by the trust. The move is similar to an approach that the president-elect took in his first term on the conflicts of interest that his sprawling real estate empire posed. Instead of divesting his assets, Trump then put them into a trust managed by his two eldest sons, Donald Trump Jr. and Eric Trump, as well as Alan Weisselberg, a long-term executive of his business.
Critics, including Walter Schaub, then the director of the Office of Government Ethics, argued that the arrangement didn't eliminate his potential conflicts. They said Trump was still aware of which assets were held by the trust, those running it weren't independent, and his companies continued to do business, benefiting him financially. So not divesting, not selling.
Right. But can he
like
sell?
He did the first time.
Can his son now sell?
I don't know. Well, yeah, I mean, it says that, you know, if he is... Donald Trump Jr. has sole voting and investment power over all securities owned by the trust.
So
yeah,
he can do stuff, right?
He can, but do you think he's going to?
I don't know. Without dad's okay?
Yeah.
I don't
and do you
know.
think he would? Yeah. So
But if you're
typically,
like so many people have said, his social media company is tied to him being in the White House, right? The value,
yeah,
to some extent,
he still
or to
owns
a large extent.
He still owns the shares in the sense that
At this point,
yeah, that he's the.
So I just wonder, like at some point, does his son then? I don't know. We should point out, U.S. presidents are not required under federal law to divest assets, even if they pose a conflict of interest. Since the passage of the Ethics in Government Act in 1978, the post-Watergate reform measure that aims to eliminate conflicts, all other presidents voluntarily abided by it.
I just want to repeat this. He now owns. Donald Trump now owns 0 shares,
right?
But he's the trust's sole beneficiary, and the trust owns all the shares.
Okay.
And he doesn't have control over the trust. His son, Donald Trump Jr., has control over the trust.
So if his son decides to say, hey, you know, $4 billion, let's sell them.
Yeah.
And then Donald Trump is the beneficiary, right? Based on what you just said?
You're looking at me like I'm some sort of lawyer.
No, I just think it's just kind of interesting. Yeah, I don't know. I just, we've been watching his Truth Social and his media company, it's Trump Media and Technology Group. You know, we've seen the movements, right, based on really his political fortune. So I just am curious. I just thought it was an interesting move.
In the weeks prior to the election, he wouldn't sell any shares of the media company. Shares had been in decline. They started to rebound during the last leg of the U.S. presidential election. Investors used the stock as a proxy for betting on Trump's re-election odds, propelling the unprofitable company's valuation to more than $10 billion at one point.
They've doubled this year, I should point out, and the stock is just down. And in what is really a broad-based up market, they're down about 1.5% in today's trade, but have been down as much as 7.5% in today's trade. So, I don't know, just an interesting story.
That is an interesting story.
Something while you're having some, holiday cookies, eggnog, getting on a plane in the wee hours. You can just
excited about that. I wonder how air travel will be disrupted by any sorts of weather issues around the country.
I don't know. We saw a little bit of snow earlier, so hopefully, right, a little de-icing maybe going on.
Notoriously reliable New York City area airports.
Yeah, hopefully it's not going to be too bad. You're getting out early, though. I always think if you're going to fly, get out early.
Getting early, getting to Denver, where we got a little bit of a layover.
Yeah.
My wife will then be getting on a flight to Southern California to her own destination for a little vacation without the family.
No kids, no husband.
No kids, no husband. I will be taking the kids.
She knows how to do it.
To my parents for a few days.
All right, everybody. We're going to get the rest of that story when Tim comes back. But right now, we're heading over to our TV colleagues. Beyond the Bell, I should say, starts right now.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're taking you to that closing bell with our global simulcast. Scarlet Fu wheeled into the TV studio as always. Carol Master and Tim Stenovic still in their radio booth as we welcome our audiences across all of our Bloomberg platforms. On this
just kidding.
Festive Friday afternoon, Carol Master. Are you wearing black on this festive Friday afternoon?
I am kind of sorry about that. I know. Look at you guys. Look at all the red and the light.
You should see his tie. Romaine has these little tiny Santa Claus on his tie, these bright red socks. It's the whole thing.
That's about as festive as Romaine has gotten this holiday season, huh?
This is the time to shine, Scarlet Fu. I mean, if you can't be festive this time of year, then when can you be?
I bet you go home and you have some Christmas sweaters you put on.
Well, we've got the PJs, we got the socks, we got the hats,
the tracksuits.
We got the whole 9 yards in the Bostic household. So I'll save you a pair if you really want one.
We totally want one.
Right.
Different tone, right, today? I mean, broad-based buying, and we're still, though, on track for not a great week here.
Yeah, off our best levels of the day, but we're still seeing lots of green across the screen. Down, though, on most of the major averages that we follow, Scarlett, about 2% on the week.
How many people think that we're going to get through this Friday with an actual vote and avert a shutdown?
I'm not taking that bet.
Mike Johnson says we will.
I'd rather go to Vegas.
He also said that a couple of times before, too.
Mike Johnson
Yeah, this
said that?
week.
Okay.
Yeah, he
Good
did.
thing.
He said the government will not shut down.
This is Plan C, remember.
Yeah.
Okay, but remember, markets seem to don't care.
Yeah.
Don't care. Markets tend not to care about these
Until they have to care.
Until they have to care. Of course, we are waiting still on a vote out of the House of Representatives. Last time we checked, based on Bloomberg reporting, they didn't even have enough support amongst the Republicans to get that through. Of course, we will bring you that breaking news as soon as it happens. But let's recap what we saw in the markets on the day. Green across the screen. A nice rebound coming off that big sell-off on Wednesday, but not necessarily enough to push stocks into the green for a week. On the daily basis, Dow Jones Industrial Average down 500 points or more than 1%. The S&P 500 higher by 64 points or more than 1%. The NASDAQ Composite up more than 200 points or 1%. And the Russell 2000 up about 21 points or about 1%.
All right, as we dig a little bit deeper, especially into the large caps, guys, most names in the index higher today. The S&P 500, 442, Scarlett, to the upside, and you had about 59 names losing some ground today.
All right, this is going to be a pretty simple IMAP. Let's go to it. It's all green right now. All 11 groups are higher for the day. The laggards here are the consumer names, consumer staples and discretionary up marginally, gaining 0.1%. But your best performers, real estate investment trusts up 1.8%, tech up 1.5%, along with utilities, which have become really tech adjacent.
All right, guys, let's get to some of the top gainers in the Friday trade. Carnival, number 4 gainer in the S&P 500, rallying, lifting its peers as well. Fourth quarter adjusted EPS, it was a beat. Company introduced some guidance for 2025, signaling that record levels of cruise demand will continue into the new year. We spoke with CEO Josh Weinstein. He was so upbeat about what he is seeing in terms of bookings and spending. So it was interesting to talk with him. But
I listened to your interview with him. I thought it was interesting when he talked about the new people coming into cruising.
Yeah.
Like I forgot what the phrase he used, but the idea that they're bringing in a lot of people who've never ever been on a cruise before.
Yeah, I think he said 10% more new to cruise in 2024 than 2023. So expanding their market base in terms of people who want to cruise.
Yeah. Nice interview, by the way.
Thank you very much. I appreciate that from you. Eli Lilly also higher today. At its highs up about 7%, finishing the day.
Laugh, Alex Steele?
I did, sorry.
At the close, up about 1%. You guys know the news. Competitor Novo Nordisk out with a new experimental weight loss drug. There was some disappointment, falling short of expectations in terms of the trials out there. So Eli Lilly, as a result, also, of course, big-time player in this space, gaining on that news. I just want to mention, I know it's a small cap, $688 million market cap biotech company. It's called Humacyte. It was up. It almost doubled in today's trade, up about 100%, 95% at its highs, finishing the day with a gain of 34%. What was interesting is that the FDA granted full approval of its bioengineered human tissue product for adults with arterial injury. I just think this is a cool space when it comes to medicine. And then just one more thing. I'm going for 4 today. The Buffett effect. News that Berkshire Hathaway upped its holdings in a couple of names. Occidental, VeriSign, and then SiriusXM, which that one was up about 12% in today's session.
Occidental? Why doesn't he just buy this thing at this point?
Oxy. Okay, it's Oxy now. They changed their name.
So why
I'm
won't
gonna
he
get
buy
an
it,
email.
Alex? Why won't he buy the whole thing?
Oxy. I hear Oxy, and you know I think something else.
Exactly.
Sorry.
What, OxyClean?
Yeah, no.
Hey, I didn't make up the name. I'm just like, I'm gonna get the emails.
I know. All right, Oxy.
Yeah, send them to Alex, please.
All right. I got the decliners today. I do want to start with Novo Nordisk. Shares fell the most intraday in Copenhagen after a failed attempt to leapfrog rival Eli Lilly in the market for obesity drugs. ADRs here in the U.S. fell by the most since 2002. By the close, down 18%. Novo's experimental obesity shot, CagriSema, helped patients lose an average of 20.4% of their weight over 68 weeks. That was short of the 25% weight loss that Novo had repeatedly predicted for its next-gen product. Once again, shares down more than 17% here. We'll go ahead and round that up to 18%. And remember yesterday's news about FedEx and shedding its freight business, also FedEx earnings. Trucking stocks fell in the wake of that. XPO Inc. shares fell by 7% today. This after FedEx cut its year guidance and said it's going to spin off its freight division. XPO certainly one of those companies. At one point in the trade, it was down the most in nearly 2 years. Bounced off their lows, though, to close at 7% to the downside. And finally, I did want to take a look at shares of Starbucks today. Ended up falling today by just close to 1%. This after the union representing Starbucks baristas went on strike this morning at a limited number of locations in 3 U.S. cities after a final stage bargaining session reached an impasse. In a statement, Starbucks said the union, quote, prematurely ended the bargaining session this week and it's ready to continue talks.
All right, well, in the bond market, we've seen some buying all across the curve pretty much throughout the day, whether you were looking at a steep decline in the equity market pre-PCE or as we opened up and the rally continued. The bulk of the buying, though, continued to be in the belly of the curve, really looking at that 7 and 5 year. On the whole, though, guys, the 210 spread had an unbelievable week. I mean, it's rising for 3 straight weeks, and we hit the highest level since 2022. It's been a very dramatic change, a sea change for the steepener trade.
All right, everybody. We are definitely thinking about the holidays next week. And here's a stat for you. This is coming from the New York Post. Americans are expected to spend about $10 billion or so on unwanted gifts this holiday season. This is according to a forecast conducted by a personal finance website. More than half of U.S. adults, apparently about 53% or 140 million people, will be left disappointed by at least one present they unwrap in December.
I don't know what to say to that. $10 billion?
That's a lot of money.
In aggregate, yeah, $10 billion.
It's a lot of money.
You know, $10 billion is $10 billion in sales for companies.
Yeah, but if you take it and then you go exchange it, like, does that actually increase because you actually wind up buying more or
That's
changing
true.
up? I mean, there's actually an opportunity there.
Or do you just leave it at home or re-gift it?
Or you re-gift it.
Or you re-gift and then it hurts you for the next year? I don't know.
This is why we do Secret Santa in my house.
Oh, really?
Yeah. We have a huge extended family too. So it just got to the point.
avoid the criticism?
No, it just makes sure people get what they want. And also it got to the point where it's like, okay, too many people to buy gifts for. This is getting overwhelming. Yeah. Let's just all have one person we buy gifts for.
Do you guys re-gift? Anybody re-gift?
No.
Well, no one's going to say that out loud, Carol.
I know. I'm sorry.
Oh, that's true. No, we never, ever, ever re-gift.
We never
If
re-gift.
you do re-gift, yeah, no, never mind.
My sister had like a re-gifting closet, I think.
Well, I think some people have re-gifting rooms,
Sorry.
yeah.
Oh my
Well,
God.
now I have to keep this in mind anytime Carol gives me a gift now.
Yeah.
Yeah, good guess. You're
It's
not.
like,
When she
you
brings
know,
in those cookies,
I mean,
watch out.
I don't know. I mean, it's
They're not
like
fresh.
today she brought me a necklace. I was like, is this really for me?
I don't know about you guys, but we've been having every day in our show meeting, we have a question of the day, and it relates to what's your favorite holiday memory. And one of the questions this week is, what's your favorite holiday movie? And everyone had answers that really ran the gamut. Alex, you pointed out there was an investor note that you saw where people voted in their most favorite movies.
Yeah. So this is from Jim Reed over at Deutsche Bank. They did a whole survey, and it was an investor survey what you're thinking for 2025. And in that, they said, what's your favorite holiday movie? And then here are the top 5. Home Alone, Die Hard, Love Actually, It's a Wonderful Life, and Elf. And then it goes on to like Home Alone 2, The Holidays, Gremlins, for
No,
example.
you actually skipped the best one.
Which one?
did?
National Lampoon's Christmas Vacation.
Yeah, I mean, I'm looking at this list and I'm like, what?
I like the original one.
Yeah, I mean, that's a
Chevy
great one.
Chase.
Come on now.
Charlie Brown Christmas.
Yeah.
Is the Grinch
Charlie
on
Brown
there?
Crisis. What about Trading Places?
That's a
wasn't
great
on the
one
list.
too.
Okay, that was a Christmas movie, right?
Yeah, that's a.
I mean, anything could be a Christmas. You know, we just watched a movie. My son picked this out the other day. It was called Carry On. It was about a TSA agent.
Oh, it's on Netflix, yeah.
To defuse a bomb, but it all happened. It's like kind of like Die Hard. It's not. It's a Christmas movie, but not. But anyway, I don't know.
Is it?
I can't
It
recommend
came out around Christmas, so it's a Christmas movie.
Oh, I see.
Yeah.
Okay, I understood.
It takes place during Christmas too.
Then it makes sense.
Black Doves, that's a good one for this this Christmas season.
I'm just going to say Love Actually. I remember bringing it up. I'm like, oh, great movie. And I think my daughter was 10 at the time. And then I realized there's a part in it. Like,
I did the same thing.
See? And she looked at me and she's like, Mom, I don't think I can watch this. And we stopped watching. Right?
What was the part? I don't even know what you're talking about.
Google it, Tim.
Okay.
Google
Yeah,
it.
now I'm lost too. Like what?
I love, right at you, girl.
Yeah, I don't think I've ever actually seen that movie all the way through.
I watched it and I could not get into it.
It's such a great movie, but...
Love Actually?
All right, we got to wrap.
The cue cards, I just didn't get it.
You guys are all going to be Googling.
Didn't get it.
You're
I don't
gonna
know
be
what to say to
Googling.
these people anymore.
I
Guys,
know.
Happy holidays.
Happy holidays. Everybody be safe, and we'll see you soon. All right, that's a wrap. Our cross-platform, we call it the closing bell. We'll see you all real soon.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Nasser. I'm Tim Stenevec. Lots of headlines out there that could cause some consternation as we head into the holiday season.
Just a few.
Well, we still don't know the status of whether or not there's going to be a government shutdown. Okay?
Right.
There's wars raging in Eastern Europe and the Middle East. There's a power vacuum in Syria. Do you need me to go on?
No. Well,
that's enough?
It's a lot. It's a lot. It's a lot. It's a lot.
Well, as Brad Stone writes in the new Year Ahead issue of Bloomberg Business Week, quote, negativity and despair are no way to bring in the new year. Brad is the editor of Bloomberg Business Week. He's also the author of many books, including the New York Times bestseller, Amazon Unbound, Jeff Bezos and the Invention of a Global Empire. Brad joining us from San Francisco.
Brad, so great to have you here with us. Happy holidays. We love the Year Ahead issue. It's a great annual offering from the Bloomberg Business Week team. Before we get into the specifics and what you wrote in the opening remarks, curious about the conversations you had with your team or even in your head when you were thinking about the year ahead.
Yeah, thanks, Carol. Well, it was a little tricky because, we had just subjected our readers to months and months of our political coverage, including our December issue, which was we produced the week after the result in the U.S. election with a full complement of stories about what the Trump victory meant. And so as we looked ahead in our annual year ahead package, really I wanted to stretch our arms a little bit to get beyond the politics story. So we've got this collection of stories about, for example, an interview with the Property Brothers, these great real estate influencers, this massive infrastructure project to keep carp out of the Great Lakes, just all these stories. There's another good one from Tom Orlick, our chief economist, on what the Trump agenda means for the global economy and how it might not necessarily mean lower growth. So, anyways, taking a little bit of a different approach than we had in the past, and then and this informed my opening remarks, trying to maybe be a little bit more optimistic. I mean, if the new year isn't a time for optimism, then what is?
I love that.
Well, okay, so once you thought all this through for the year ahead issue, you do give us this optimist guide to a chaotic world. And you spoke to Harvard psychologist Steven Pinker, who kind of says, this is all our fault as journalists and writers of headlines.
Well, no. I mean,
am I projecting here? Am I projecting here?
He acknowledges that the job of the news is to cover things that are happening, and things that are happening that deviate from the norm, can be negative things. But the point was that the norm is pretty good, and that there's no greater time to be alive. And you look at numbers like vaccines reducing infant mortality by 40% over the past half century, or Africa infectious disease deaths decreasing 42% since 2015. Even good news in terms of carbon emissions lowering, that these are things that we should pay attention to. And so that was sort of the framework that, however one feels about political changes in the U.S. or in Western Europe, that, there's a backdrop that is actually pretty rosy.
Yeah, it's kind of interesting. I have to say, reading through your column, I thought about, sometimes I get into a cab, typically in New York City, and it often is somebody that wasn't born here, and we start having a conversation. They're like, you have no idea how great this country is. And we'll talk about division or something, and they're like, you have no idea how great it is.
This is why your Uber rating is 1 star, Carol. Because
no!
I'm just kidding.
But I do think that's what you get to. And, it's so easy for us to be in it day to day. And sometimes Tim and I go through a show, man, when we're like, wow, that was dark. But if you broaden out, the lens, we have made some really great advancents on a lot of different fronts, Brad.
And by the way, I didn't want to be completely apolitical. Putting aside the battle over the budget and whether the government might close down this week, the U.S. government. I mean, it is a time to be optimistic about a new presidential administration. I think we should give every incoming president the benefit of the doubt. And so, when it comes to, regulating nuclear energy, a technology that has historically made a lot of people squeamish, that's perhaps something to look forward to. Robert F. Kennedy Jr. gets a lot of attention for his unorthodox, shall we say, view on vaccines or fluoride in the drinking water. But rethinking public health guidelines, looking again at ultra-processed foods in the food chain. I was in the mood to see the silver lining, let's say, and I think it's a good time to do that.
We'll talk a little bit about this sort of the Silicon Valley angle here with Elon Musk and the Department of Government Efficiency and what that could actually do.
Well, I mean, look, let's, at this point, take them at their word that they're trying to get make government more efficient, boost business activity, roll back the regulations that have made it difficult to build infrastructure, say, roll out high-speed trains. There isn't any reason to be complacent about the status quo in the United States when we look at how quickly other countries are able to do big things. And so, excuse me, it was a brief cough. I think, we should be, give Elon the benefit of the doubt. I mean, he's behaved a little bit like a blunt force instrument, particularly this week. But, I was listening to Mark Andreessen on a podcast recently, and there has been a lot of frustration in Silicon Valley about their ability to develop new technologies. And so, look, their candidate was elected, and, we're going to see if they can make a difference.
I just want to know, though, did you originally, when you started thinking about it, you're like, I'm going to write a column that, there's a lot of questions and it feels a little dark. And then you're like, well, wait a minute. Glass is half full, glass is half empty. I'm just curious if you did two versions of this, Brad.
I gave myself the challenge of writing a story with the headline, the search for optimism or a guide to optimism. I just felt, and I don't know where the notion came from. You guys know I'm here in the Bay Area, so excuse me. So there was a lot of hiding under the dining room table in my community, and so I wanted to look at things from a little bit of a different perspective.
Yeah, love it.
Hey, I want to hear a little bit about your thoughts on the tech firms kind of making the pilgrimage to Mar-a-Lago just in recent weeks. We had Jeff Bezos down there earlier this week. There's probably nobody who knows more about Jeff Bezos than you. How would you describe a meeting like that with President Trump and sort of the context around that? President-elect Trump.
Opportunistic. I mean, look, there's no mystery around how to work with the federal government when Donald Trump is president. And, you go and you kiss the ring, so to speak, and he responds to that. And so we're seeing one CEO after the other go do that. Now, in Jeff's case, it was interesting because Elon Musk shows up at his table, maybe to his, I no doubt, considerable surprise. But, Jeff has a lot riding on this administration. Mm-hmm. He's got his company, Blue Origin, has the New Glenn orbital rocket sitting on the launch pad at Cape Canaveral, waiting to be approved. And so, he needs a partnership with this federal government, and probably not the kind of acrimony that existed between him and Trump during Trump's first term. And look, and Shu Chu, the CEO of TikTok, also going down there as he faces a deadline for ByteDance, the Chinese company, to sell TikTok. All these leaders know that the path to getting what they want is a little bit of sycophancy, and so that is why they are in Mar-a-Lago.
Well, great stuff as always. Happy New Year, happy holidays. Brad, always good to check in with you. We're looking forward to the new issue. Brad Stone, editor of Bloomberg Businessweek, author of many books, including Amazon Unbound. You are listening to Bloomberg Radio.
421 on Wall Street. We do check markets all day long here at Bloomberg. The party is over at Party City. The retailer is shutting down, laying off its employees just 14 months after it exited bankruptcy under a plan that had been designed to ensure the retailer's long-term survival. Party City has about 700 stores and has struggled to remain relevant in the age of online shopping. Major U.S. stock indexes saw their worst week since mid-November after the Federal Reserve's decision this week to be more cautious about cutting rates next year. Royal markets now for the week. The S&P 500 index was down 2%. Today, though, the S&P advanced 63 points, heading into the weekend at 59.30, up today by 1.1%. The Dow up 498, up 1.2%. Nasdaq up 199, a gain of 1%. 10-year 4.52% with a 2-year that's yielding 4.31%. Gold up $28 the ounce, up 1.1%. West Texas Intermediate crude 69.47 a barrel, up by just about 1%. And Bitcoin been a volatile day, trading below 96,000 right now. 95,690 Bitcoin now down by 1.7%. AT&T hoping to persuade people across the country to break up with their landlines by the end of 2029. And to do so, it is deploying a new weapon that might help, and that is a wireless home phone. The carrier announced at a recent investor day that it will retire the vast majority of its copper networks over the next 5 years. Again, recapping, S&P up by 1.1% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Tomorrow, Carol, I'm going to do what millions of other people are going to be doing.
Lucky you.
Are going to wake up in the middle of the night. I'm going to struggle to install some car seats in the Uber to get to the airport at 4 a.m., fly with the entire family somewhere for the holidays. In my case, we're have a little layover in Denver before we make our way to a much warmer part of the country. No complaints.
But you're crossing your fingers that everything goes well.
Crossing my fingers that everything goes well. I'm not alone. The trade group Airlines for America says that a record 54 million passengers will fly on airlines in the U.S. between December 19th and January 6th.
You know what would be nicer than doing that?
Yeah, flying on a private jet.
Well, we've got a perfect person to ask about that. Michael Silvestro is Chief Executive Officer of the fractional private jet firm FlexJet. They own and operate and maintain some 300 aircraft, and he joins us here in our Bloomberg Interactive Broker studio. He's also a former football player, which is really kind of cool.
Yes, good research for you,
Notre
Carol.
Dame. I'm really impressed.
Notre Dame's playing tonight, go
Yeah,
Irish.
Exactly. Welcome. How are you?
Thank you for having me. I'm great, thank you.
Well, it's great to have you here. We have spent a lot of time talking about private aviation over the last, I want to say especially kind of the pandemic. It just felt like all of a sudden it took off. Nobody wanted to be, those who could afford it would tap into it in a big way and really saw it take off. Tell us where we are in this marketplace right now.
So just like everyone else, the pandemic brought travel to a halt. But coming out of the pandemic, we've seen a couple macro trends. First of all, people who had the ability, financial wherewithal to fly privately before the pandemic, who chose not to, are all in now. Convenience,
So they started
safety.
then and they've stayed with it?
Absolutely. Our retention rates of those that have come in after COVID are running 97, 98%.
Wow.
So if you have a sense, just to give you a sense of metrics, we were on a very, very strong run pre-COVID coming out of the pandemic. If you look at our book of business today from where we were 5 years ago, it's up 60%.
When we talk who's flying, I know demographics have shifted quite a bit for you guys in recent years. You're seeing more and more young people now become part of the program, people in their 40s. What's the demographic looking like?
Yeah, Tim, the macro trend is younger, bigger, and longer. So a generation ago, a man or a woman would wait till maybe late 50s, 60s to start flying privately. Today, young men and women in their 40s are all in. Secondly, they're not starting with small airplanes. You know, they're not starting small and moving their way up the food chain. They're in on mid, super mid, and heavy jets, and they're going all over the world. So the number of transatlantic crossings we did this summer to Europe were unbelievable. So people are just going everywhere.
Remind us, and our pursuits team often taps into this, but remind us of kind of the financials in order to be a customer on one of your jets.
Sure. Well, it really all depends upon your missions, which can be easily defined as where do you go, how often, and with how many people. And that kind of helps us create a profile of you and what airplane and services would best serve your missions. So, you know, if you take a mid-sized airplane, Praetor 500 from Embraer, for instance, for us, the buy-in on a whole aircraft basis is about $20 million. So you end up saying, hey, I want to fly 100 hours a year, so that's about a $2.5 million check. And then your management fee and then your hourly rates roll up to, for 100 hours, you're talking about not quite $1 million a year in operating costs.
So when you say fractional jet, you're actually owning a piece of the jet.
Yeah, you know, Tim,
that's different than other firms.
It is, and the model for us is that we own and operate over 300 airplanes, but when you buy a share, you're actually purchasing an undivided interest of a serial numbered aircraft that is part of our fleet. So as an individual owner, you can depreciate it, you can finance it, but then you allow other FlexJet owners to fly on your plane and vice versa. So the master interchange agreement allows the operating metrics to work.
So let's go with that Embraer, $2.5 million buy-in, and then operating costs that are associated with it. What are those typically?
Usually, well, for 100 hours a year, it's, you know, by the time you do a management fee and an hourly rate, it ends up to be about $8,000 to $9,000 an hour.
So to make this, it's some people would say it's hard to make it worth it, you know, no matter how much you fly. It's about convenience, it's about comfort, it's about time not spent at, you know, Newark Airport or whatever. Who's the typical profile in terms of like net worth that make this choice?
Yeah, so there's really two, I'd say, major constituents that fly. Ultra high net worth individuals that are using it for a combination of business and pleasure.
So these are people $30 million and above, typically net worth is what we think about with ultra high net worth,
That's a good benchmark. And then what we've seen recently is a lot of corporate flight departments are using fractional at FlexJet to supplement their own airplanes. So they're not going away. People are still going to have aircraft in their flight department.
Right.
But rather than buying the fifth or sixth or seventh one, it's a smarter way to deploy capital where you just engage in a fractional share in addition to the airplanes that you fly yourselves.
All right, so who's using your jet card?
The jet card? So we have a very robust business that we own in the family of companies called Sentient Jet. So you buy a block of 25 hours. It's like a big gift card in the sky.
Right.
And so, and you buy them in a category of an airplane, not necessarily a specific aircraft type. So that would just be for someone who's an occasional user that would average only about 20 to 25 hours a year.
Okay, so not too much.
And would you see the profile of that person is not an ultra high net worth individual. Maybe they have many millions of dollars, but they're not actually buying a $2.5 million share in an aircraft.
They would be, I would give you two examples. The difference would be perhaps they don't have the financial wherewithal or the net worth that a fractional customer would, but they might, and they would just only buy a jet card because of their frequency of use. So you could be very, very wealthy, but you just, hey, I have 2 or 3 trips a year, so it's not worth me investing in a fractional share and make that commitment. You just do a jet card.
What's the biggest business for you guys? Where do you make the most money?
Oh, fractional. So FlexJet's model, which is very, you know, there's all these ways to get on board. But the beauty of the fractional model is our recurring revenue. So once you're in the family, once you've bought or leased your share, you're paying a management fee just like belonging to a country club. Whether you go for dinner or play golf, you still expect a level of service. When you show up, you want the greens mode, you want a wonderful menu. Same thing for us to deploy and to have on the ready 300 airplanes around the world. That takes a significant infrastructure.
It also takes pilots. And one of the things that we've talked about a lot, I feel like, Tim, with people in the aviation industry is the shortage of pilots. How are you dealing with that? And tell us what color you can give us around that.
Well, that's a wonderful question. I would tell you that one of the things I'm the most proud of is that the FlexJet pilots on their own voted. When we bought the business, they were unionized, and they voted to have an at-will relationship with senior management as opposed to being represented by a union. So we have...
So from the get-go?
Well, that was about 6 or 7 years ago.
Okay.
So we have a wonderful relationship with our pilots. couple things. Number one, we are committed to having the highest paid pilots in the sky. We also we really try to operate on a familial culture. And so we end up treating people with great respect and care. And we just know how to treat people.
Where do your pilots come from?
All over. They come a lot out of the military.
So those are on the younger side. Mm-hmm. Do you have folks who've retired from the big airlines?
We do. Not a lot, but
because there's mandatory retirement.
65.
Yeah.
So I just flew with a guy that had been with us less than a year. He was 66 years old, incredibly fit and competent.
Right.
And so we're happy to have him.
Is it hard to find them, though? That's what I'm just kind of going back to the demand supply.
Well, here's something else we did. We were noticing what our attrition rates were, and we noticed a couple years ago, because one of the things that speaks to our culture is we don't have a training contract. So we take you at your word. So if you apply and get accepted as a job as a pilot for FlexJet, we train you, we invest that money in you, and you are not obligated at all. There's no payback in case you leave us. So a lot of people were negatively profiling in us, coming, getting trained, and then leaving after about 2 years or so. So one of the counterintuitive things we did was we raised our minimums. So while everybody was in the face of a pilot shortage, you would think, well, you'd lower your minimums.
To attract more people.
We raised ours to 3,000 hours as a minimum.
So that's what you need to have under your belt in order to become a pilot?
FlexJet pilot, only 1,500 hours, so twice as much as what the industry calls for. And what we have attracted in the last 2 or 3 years since we've done this is someone who's more career-minded, that they want to come to FlexJet because they appreciate the culture, the compensation, the work rules, the environment, and our retention rates have plummeted since.
Where were they going when they were leaving?
To the airlines.
What do you find when somebody who owns a fraction of a jet wants to use that jet, but then somebody else is using it?
Well, that's the beauty of the model. That's not their problem. That's my problem.
Does that happen a lot?
No. We end up having the model. So we, as a company, we own about 20% of our fleet ourselves. It's called core fleet. Mm-hmm. So we don't commit out about 1 out of every 5 planes, and that's what we need to avoid what you just asked me.
Can you use data, AI, or something to help you figure out kind of what?
We're
I'm just curious.
Yeah, we're still, we have a very sophisticated scheduling program that we created ourselves, but then we also add very experienced schedulers that look at the board and say how we move things around to make sure that we take care of our customers.
I can only imagine. There must be like a room, or I don't know how it is.
So actually, no, it is a room. It's a beautiful, brand new, just year-old global command center that we built in Cleveland, Ohio, which is our headquarters, where we have visibility into our entire fleet around the world.
Pretty cool stuff. Mike, thank you so much.
Thank you for having me very much. Merry Christmas to both of you.
Yeah, look forward to talking again in the new year.
Thank you.
Mike Silvestro, Chief Executive Officer of FlexJet, joining us right here at our Bloomberg Interactive Broker Studio. We love talking planes.
We do love talking planes. We also love talking anything you can eat or drink. We're going to do that next with a professional
Eat a drink on a plane.
taster. Yes, it's a thing. That's next on Business Week.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with the latest developments out of Washington. Indeed, another day of fast-moving developments. The House will vote on the latest version of a Republican stopgap funding measure sometime between 5 p.m. and 5:30 p.m. This, according to a notice from Majority Whip Tom Emmer. We've got you covered on Balance of Power coming up at 5 o'clock Wall Street time today with Kaylee Lyons. Stocks moved higher today, but they did have their worst week since mid-November. Today, the S&P 500 index was up 63 points, a gain of 1.1% on the week. The S&P dropped 2%. The Dow up 498, up 1.2%. NASDAQ up 199 today, an advance of 1%. 10-year at 4.52% with a 2-year that's yielding 4.31%. Gold up $27 the ounce, up by 1% today. West Texas Intermediate crude, little changed, up just under 0.2%, 69.50 a barrel, and Bitcoin now down by 1%, 96,321. As for the inflation backdrop heading into the new year, Miguel Sosa is head of market research and strategy at Blue Rock, and he was a guest today right here on Bloomberg Business Week.
In our view, inflation continues to moderate. The Fed has communicated that they're not going to be as aggressive in cutting rates in 2025. And we at Blue Rock see that as really as a Goldilocks scenario where rates are not going to go back to their 0% rates or levels that we saw several years ago, but we're behind the 5+% peak of federal funds rate.
And again, Sosa was interviewed right here on Bloomberg Business Week. The 10-year, 4.52%, that 2-year, 4.31%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Do appreciate it. Carol, I don't know about you, but when I'm giving gifts these days, I kind of like to give people things they can eat or drink.
I love doing that too.
Our Bloomberg Pursuits
team.
Don't
you like to get something that you can drink or eat?
I do.
Especially eat.
Eat, like when you brought cookies last week.
That's right.
To everybody in the office who was here. That was
kind of fun.
She brought seven different types of cookies.
It was at least 7 different kinds. Yeah, and I didn't even make them all.
They were so good.
Anyway.
Still thinking about those. Hey, our Bloomberg Pursuits team is out with its annual gift guide. You can hear about it on our weekend show and on our podcast. In addition to watches that cost hundreds of thousands of dollars, some nice pieces of jewelry that will set you back more than $500,000. I know you had your eye on that necklace.
I did.
It includes quite a few things you can taste: chocolate, coffee, alcoholic jellies, and liquor.
Well, things you can taste. That is something that Mandy Neglich is her specialty. She's a writer and consultant working in the beverage and travel space. She's also the author of How to Taste, a Guide to Discovering Flavor and Savoring Life. She joins us here in our Bloomberg Interactive Brokers studio. Welcome to Grace, so great to have you here. Tell us about, your certification that makes you kind of an expert when it comes to taste. You've got a book.
Yes, got a book, and I do have several certifications. I actually am a certified taster, which means I can taste all different specialty compounds, but I'm also a Cicerone, which is a certified beer taster and server.
First of all, how do you even get to do that? Like, what's the training involved to do that?
Lots of sniffing, lots of slurping, lots of memorizing things. I can literally smell different sulfur compounds when they put them in front of me in coffee and chocolate. In beer, wine, they'll spike something and I'll be like, cis-3-hexanol, that really fresh
So do you
sulfur.
walk into a room like our studio and you're like, oh my God, like I'm smelling...
You know, I can smell everything, but you guys smell great. Okay. So you don't have to worry too much.
But do you, is this something that anyone can do, or do you have more sensitivity than other people?
So everyone can train it. There's actually really cool studies that you can grow your olfactory bulb, which is how we understand smells, within 2 weeks of training.
Wow.
Just sniffing, really concentrating, like we're going to focus on these wines. What are you smelling, trying to remember it, and you'll change the way that you taste in 2 or 3 weeks.
Very cool.
Why should we do that? Like, what do you get out of learning how to kind of, like, think about smell when you're eating or drinking and so on and so forth? Why is that so important?
So think of watching a black and white movie, like that's what you're eating like right now, and then think of it in color. Think of all the depth, the way that you can relate all of your memories as you're enjoying everything that you taste. It basically makes every sensory experience more deep and more memorable, which is what we want to live life for.
Is it hard work for you, though, in the sense of, like, when you go out to a dinner with a friend, you're not necessarily enjoying it as much as somebody typically would because you kind of feel like you're working?
So I've been doing it for so long that I believe there's a place for every taste. So even if something is a little, not my favorite, I totally understand why it's there and I can appreciate what's going on. I think everything that we experience is just a memory we're making, and there's a place for everything.
You're like, somebody's like, this tastes so good. You're like, actually, it doesn't. And here's why. I'm going to
Tasting
tell you
is so
why.
subjective, though. It's even our genes. Our genes, certain genes.
Yeah, but come on, Mandy. There's times you're like, no, it could be much.
No, that's legit bad.
There's some genes when we get to this red wine. If you don't have the right gene, you might literally just not taste the floral notes.
I love
Not gonna
wine.
judge.
And so tell me about, like, all right, let's start with this first wine and kind of what we should do in terms of understanding the smell and why it's important and what you do smell when you.
So this is
check
the
it out.
Garzon Albarino from Uruguay, which is a pretty cool wine region.
Yeah.
What we're going to do is first, you just want to smell it a little bit further away.
Okay.
Just see what you notice first. This is going to be your top notes, the most powerful notes in the wine. And then we'll get closer and give it a little swirl and smell again. Are you guys getting some like fresh fruits on this? This is actually the newest vintage, the 2024 Garzon. I feel like it's so melon forward. It used to be a little bit more pear. And
Are you getting melon?
Oh, I got melon.
Yeah, you get that
getting
cantaloupe
melon.
instead of the pear. I don't know.
Nice.
All right, so we can give it a little taste.
Okay.
I love this wine because it's not too intense. It can pair with pretty much any food. So I feel like you can show up at a party and no matter what your host is serving, you're not going to overpower their dinner. It pairs with everything and it's, under $20. So you can bring 2 bottles, one to serve, one for them to keep later and still have it be really good guest.
Are you finding
I like
as
this.
you do this that, because we talk a lot about this, that there are, yes, some really expensive wines that are incredible, but more and more there are some great offerings that don't cost that much money, but have the smell, like all of that is there.
Right, we're getting all this lush fruit on this, right? Which is what
Yeah.
people look for in like a Sauvignon Blanc. The savvy bee girlies out there, but for the price of a good Sauvignon Blanc, you're going to be paying way more than this, under $20 price limit. And this has got all the complexity, the right intensity that you want to be paying for that white. So you're getting the flavor without the price tag, just because it's from a little bit of a different region. It's from Uruguay in South America.
Are you ever working with a customer and you're like, you do this for a winery or so on and so forth, and you're like, this is terrible?
Never say it's terrible. I will say there's 7 different ways to smell something. So, sometimes we have to get into 6 and 7 before we're really enjoying it and praising the wine. But this one, I feel like right on the front.
It's lovely.
It's so lush.
I'm
and
not a
fruity.
white wine drinker, but this is lovely.
Yeah, and great for a
Really
party.
love it.
If you're a red wine drinker, though.
I am a red wine drinker. So tell me what we've got here.
So this is the Rioja from Faustino, and they are kind of the Rioja producers. This is the 2014. It just hit shelves, so we were just talking about it in the green room.
What are we smelling?
Do you get that big plum note?
Yes.
The last vintage did not have all these like black dark fruits, like that currant. And the nice thing is, if you want to pick this up and taste all those dark notes, they come with these little like wine markers right now. So you can pop it on your glass. It's on the top of the bottle. It's like a little gift. So, you're not going to sip my brown Faustino marker. So, as you're going through the night, enjoying your glass, one thing you can worry about with tasting, if someone else's bad breath was in your glass, you're not going to have to worry about that when they're marked.
I have to say with my family, large family, like we all have our little like charms that we put on our glasses to make sure like we don't mess up. Like that's my wine.
We have that too.
Right?
Yeah, and if we're somewhere where we don't have that, we use different colored rubber bands.
Do you really?
Yeah.
Okay,
Yeah.
perfect. And it's such a small little gift. Like, I think when you give people wine glasses, you don't know what's in their cabinet, and you can just be, like, forcing them to store something else. Like, a little extra wine charm isn't going to take up your drawer space.
So tell us again, like, what we're getting here.
Yeah, so we should be getting some, like, really dark fruits on the nose, and then, yeah, you guys just took your sip.
Sorry, I jumped the gun with the
You
sip.
get, like, a little spice at the end, right? Like, it kind of ends with
That's
almost
really
a little
nice.
bit of
I like
black
that a lot.
pepper, and what will sit on your tongue after is kind of that powerful spice note and that really stewed plum.
What is this good with?
So this you'll need a little bit more of an intense food. So kind of like some red meats, things like that. A
That's what
really
I was
rich
thinking.
cheese would be so nice with that because you get that nice tannin at the end. So
Nice
something
legs
like
on
a
it too, yeah.
exactly something like a Gouda and then a sip of this after. It's gonna kind of balance it out perfectly. You're not gonna have too much richness on your palate.
So this is a $37 bottle of wine.
Yeah, under $40. We
Yeah.
love that.
That's great.
Yeah, exactly.
And I don't know if we said that the Garzon was $17.
Yeah, under $20.
We're not going to let you go because we're going to save, since we're getting ready soon to bring in the new year, there's a champagne we're going to check out.
Yeah, we got to celebrate.
So we're going to take a break, do some news, and come back with Mandy Niglich. She's a writer. She's a consultant. She works in the beverage and travel space.
She's a smeller. She's a taster.
Sniffing all the time.
I just think there's got to be times you walk in somewhere and you're like, whoa.
Yeah, hello, the subway.
Is that problematic?
No, it's a symphony of scents in the subway.
Yeah,
There's so
that's
much.
one way, that's one way to describe it. I'll think about that next time I get on one of those cars.
Her book is How to Taste, a Guide to Discovering Flavor and Savoring Life. We're going to come back. She's going to stay with us in our studio. We're continuing to watch for headlines out of D.C., whether or not we get a vote, and there will be no shutdown of the government. We're listening and watching Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Carol Massar. I'm Tim Stenevec. Let's get right back to Mandy Neglich. She's a writer and consultant. She works in beverage and travel. She's also the author of How to Taste, a guide to discovering flavor and savoring life. And we got some white wine. We got some red wine. We got a little bit of bubbly, Carol.
We have a little bit of bubbly. And listen, in just a little bit over than a week and a half or so, we're going to be celebrating 2025, the new year. And so a lot of bubbly is going to be popping out. So let's go there and tell us what we're smelling.
So first I want to say, just look at the shape of your glass, too. You see how it's a little different?
Yeah.
With bubbly, we're going to have rims that tip in a little bit because the bubbles are actually forcing aroma out of the glass or out of the solution, and it's going to all collect right there. So this is our special champagne glass. Don't let anyone serve you in a flute.
Okay.
And
really?
Why?
Because it doesn't collect that glass, right? So all of your aroma is just shooting out, and there's no way to get your nose in there.
You know, it's so funny. I was just going through glassware at home, and
yeah,
like get rid of the flutes.
Unless you're doing a big toast where no one wants to taste the champagne, like you have 100 people, that's what a flute is good for. But if you're trying to taste this Paul Roger, this is what you want. You want to get your nose in.
Okay, so what do we, all right, so I know. All right, we're going to continue that. All right, tell us what we're smelling.
So this is Paul Roger, and unlike a lot of champagnes that have those really bright apple notes, this is like a little buttered brioche. It's a little bit sweeter, and if you taste it, it has a lot more body than a lot of champagnes.
Yeah.
It actually is 3 equal parts of 3 different grapes.
Oh my gosh.
Ooh, that's good.
So you get that structure that kind of weighs on your palate a little bit. And I think sometimes when we're sipping champagne at New Year's, it kind of zips right off your palate. It's appley and it's gone. I love that this kind of hangs around and stays on your palate for a little bit.
That's nice.
And as a gifting champagne, it comes in a beautiful gift box and it's under $55. So a lot of those gifting champagnes will be over $100. This one I think has the flavor, has the complexity, and hits you at a really nice price point.
The first bottle of this, or this brand, sold in 1849.
Yeah, 175 years ago.
Love that.
Sticking
some
around.
history there.
Yeah, exactly.
You do coffee, you do wine, you do beer.
Chocolate.
Tea. What's your favorite?
Oh, my favorite. Oh, good question. I mean, I do love bubbles, but probably my favorite is getting into like the dark spirit space. Love a little whiskey tasting, a little dark rum.
Hey, explain how your business works, like who brings you in and who you do consulting for.
Yeah, I work across restaurants, bars. I do things like private jets. We just had a private jet person on working with those companies. And basically what I'm doing is making sure every palate that walks into the door is going to have something pleasing to them. So whether you like sweet, sour, really intense, less intense, we're going to make sure the drinks menu or the dessert menu offers something for everyone. And what we don't notice is the way that we all taste is a little bit different.
Right.
So just genetically, there's certain flavors you can't taste. There's people who think everything is super bitter. So I kind of know the lay of the land, what percentage of people are going to think things are really bitter, and I make sure the restaurants know what I know as well.
I was just having this conversation this week with my wife and her parents about cilantro, because it's like this very polarizing thing to put on tacos, for example. Some people think it tastes like soap. There's a whole portion of the population. There's a whole portion of the population thinks it tastes fine. Why does stuff happen like that?
So this is totally genetics, and the more scientists dig into our genes, same thing, a third of people can't taste violets at all. They don't know they can't smell it. It smells like nothing to them.
Wow.
You can live happily your whole life without smelling violets, but when we know that, you're not gonna put a violet cocktail on a menu, right?
Oh.
Same thing with these genes in cilantro. There's also bitterness. Like I said, there's 5 types of bitterness, and there's 25% of the population can't taste 3 of those types. So to them, it's just not going to be bitter.
You know, in the break, we were talking a little bit about, and we were talking so much about smell and how it impacts us, but the color of a store or restaurant or something, and even in your book, you talk about, you know, throwing your next dinner party where the thermostat should be. And I just, like...
Oh, where should it be?
What are the things that we need to think about, like when we're serving food or wine or just kind of that setting, especially something like a dining room or something where we're going to be eating and drinking a lot?
Yeah, going back to the Faustino Rioja is actually a perfect example. See how it's like so opaque and you kind of can't see through it?
Yeah.
Our brain just sees this rich color and we immediately already think, ooh, expensive, ooh, fancy. There's a lot of wines that are great that have a lighter color, but our brain just sees this rich red and thinks, sweet, I want to taste that. Red is one of those colors that we reliably can trace to being, that we crave it and that it's a little bit sweeter. So knowing all different things, you know, about how you want to serve a wine, how you want to serve a cocktail. Certain cocktails, if they're not so attractive, if they have that kind of pale color, we'll put it in an opaque glass so people can't see what it looks like and they're only getting the flavor.
Ah, isn't that
you don't want to let your eyes play tricks on you,
like
know?
all these things that like kind of play.
Yeah.
At play. What?
The science around smell. You mentioned that scientists, doctors are starting to associate loss of smell with certain ailments. What's the research there?
Yeah, so the size of your olfactory bulb is actually a really great indicator of overall brain health. And scientists at the Monell Center have been researching smell loss, and they think it's the earliest sign of dementia and Parkinson's, but there's no good, consistent test for smelling. You know, you don't go into your physical and smell a lemon every single time. So a lot of people don't self-report, oh, things don't smell as strong to me. And really what scientists are starting to push for is a physical, at your physical, when you're little, you start doing a smell test, and they can trace your smell your whole life. So when that starts to drop off, you can start kind of combating or testing for any kind of